them. I have some of them.
Ladies and gentlemen, can I ask for your attention? First of all, let me kindly ask you to come closer. We'll make it less of a formal conference because we are actually, many people in the room know each other. We've got a representation of vendors, regulators, standard setters. So our proposal to adapt to the agile situation where the students are still sleeping and part of the participants from the industry as well, what we would like to do is we would like to change a little bit the format and make it a less formal discussion. Yesterday we had a great example of this discussion. In the afternoon we had a very, very relaxed format style of just exchanging views on the future of dictionaries, financial reporting, the way how the standards are defined. So I think that this would be a better way. We've got a few really good speakers, keynote speakers, to give us some food for thought. And let's make it a little bit less formal. Let's make it a bit more exchange the views, comment, and so on, just like in the style of yesterday's afternoon, rather than presentation after presentation. What do you think?
Great.
Okay, and I will definitely make use of the enthusiasm of Leaf to help me here. All right. Firstly, we've got this tiny surprise for you as yesterday. Some of you who have seen it yesterday, it will be similar for some new. Yes. So yesterday I shared with you a couple of thoughts, especially on one particular component which is important for me, which is trust. And my personal belief is that we are living in the times of disruption, and this disruption doesn't really concern technology. We typically embrace technology. For hundreds of years we've been embracing technological developments. But what we are facing currently, which is the most challenging thing, is this disruption in trust. Are we in a position to say that people trust the financial system? I don't think so. I personally doubt. What do they actually trust? They trust information which sometimes is perceived as alternative facts. They trust information generated on the network which is difficult to be verified. Okay? So how do we embrace this trust? How do we embrace this challenge to create the trust in the financial ecosystem? How do we tackle the issue of people generating a lot of information on the network or relying on things which previously would be considered untrusted? Cryptocurrencies is one example. There is no supervision, there are no organizations which impose any supervisory rules on top of that, yet a number of people, not only the cypherpunks, they do trust cryptocurrencies. And how do we embrace that change? How do we go forward, and what are the components of building this trust in the ecosystems? If you look back to some of these interesting books, one of them that I had the pleasure to read was Liaquat, if I remember correctly his name and surname, Ahmed, Pulitzer winner, and he wrote the book Lords of Finance. Has anybody of you had a chance to read it? I do recommend it. It's a story from approximately 1880 until 1930 or 1940, from the perspective of four central bankers, establishing actually the modern central banking systems. It is the governor of the New York Fed, the governor of the Bank of England, the governor of the Reichsbank back then, and the governor of the Banque de France. And it tells the story how these guys economically were contributing, interacting, shaping up the financial relations and the entire ecosystem, building this entire ecosystem back then. The very peculiar thing that Ahmed captured in this book are all the economic and social conditions which actually contributed, or he argues that this contributed to the war being waged. These factors embrace things such as unemployment, embrace things such as interest rates. These factors embrace things such as basically the situation, relations between the banks and the borrowing of money between the central banks. There are really interesting facts. I don't know if you know, but there were situations where the Allies were borrowing money to the Reichsbank, which was used to fund the weapon to be used in the war against the Allies. So these were the real situations. And all these things were captured as a combination of economic and social factors. Now, back there was a lot of debate, and this is what Ahmed also pictures. There was a lot of debate about this trust. Who can you trust? How do you establish this trust, and so forth? The question is, are we in a really, really different times nowadays? The trust in the financial services in the organizations such as central banks disrupted, at least since the last crisis, but I would even argue that before, with the different bubbles on the markets and so on, it's really difficult to say whether people do trust the processes, the data, the supervisory methodologies or not. If you ask a common person on the street whether they understand even the relationships and the trust that is being built by their very financial ecosystem that they operate in, with currencies, with payments, with buying certain securities for their retirement funds and so on, it would be really difficult for them to respond yes, on a common, so to say, level. Now we are also facing issues such as financial inclusion. Lots of people who are way even further out of the financial ecosystem than we can imagine, not having access to the very basic tools which many operate. So that's all components of building this trust. And yesterday I argued that it is really not important whether we build the ecosystems agile, whether they are efficient, whether they are stable, standardized or not standardized. The very first and most important thing is whether they are trusted. For me personally, it means that when my daughter grows up, whether she can actually trust the system that will be operated. Will she understand the cryptographic functions that are laying below all the, so to say, foundations of this, let's say, national cryptocurrencies? I doubt it. Well, maybe she will, actually. Maybe she will be a cryptographer and she'll be a hacker and she'll know much more about it. But on average, would a person understand all of these math going in? Look at the examples which have been flying around in this ecosystem, in these advanced mathematical circles recently. I don't know if you've heard of zero knowledge proofs. Something which effectively is a very simple thing. How can you establish a system in which someone, without releasing a lot of information, can confirm a status of something? Right? These are very, very common logical issues. But the solutions that are being proposed nowadays involve elliptical curves, involve some very, very advanced math. Can you trust, actually, that these algorithms, based on this trust, deliver what you expect them to? And how would you trust it? Before we had trust in institutions, central banks, financial institutions, regulators, supervisors, governments. Oh, doubt about governments that we ever trusted, but anyway. But we had some trust in that. These components were establishing the trust. We also built trust into law, processes, regulations, and so forth. Now, trust seems to be getting into things such as algorithms. Can you actually trust an algorithm? Will you trust the AI that will emerge? Is the AI intention going to be exactly the same as, let's say, a group of bodies who created this AI, or a group of experts who created this AI? So with that, I would like to leave that as a food for thought and a food for discussion. I would like to invite the first speaker. I asked Beju to, all of you pretty much know Beju, but if not, he's the head of regulatory data collection and analysis, if I remember correctly, right? Yeah. I will leave it to you because the titles are always confusing. But most importantly, Beju is actually a thinker in terms of combining various aspects, such as standards, such as technologies, such as data, and the regulatory processes. And at the Bank of England, they do operate on a vast majority of all these components. So Beju, without any further ado, if you could share with us your thoughts on this future trends, where the bank comes from, what's your views?
Thanks, Michael. Morning, everyone. That is on. Yeah, as Michael said, he set me a bit of a challenge around talking about what the vision for a future of financial ecosystems might be. So today I'm not going to be talking about XBRL or what the bank is up to or blockchain or fintech. Well, I'll talk a little bit about fintech. This is going to be something a bit more different, concentrating on some of the areas that I have an interest in and have a bit of a passion for. And yeah, I'll just get into it. But before I begin, sessions presented under Chatham House rules, so no comments or opinions can be attributed to me, and also any opinions or views are expressed here are my own, not necessarily those of the Bank of England. So as Michael alluded to, I'm head of data collection and publication at the Bank of England, so I'm responsible for the systems that bring in all the data that we use in the UK for all the bank users. I also manage all our market data vendors, and I also represent the bank on a number of technical committees for a lot of the European agencies, the LEI, and also ISO 20022. I think the theme for this presentation is going to be look to the past to understand the future and to know where you might be headed. Right. If you look at the technology journey so far, so finance pretty much lags behind other industries when it comes to the use of technology, the application of standards, the way it uses its data, and generally collaboration. Right. If you look at things like supply chain and pharma, they're much further ahead. Now, over the past decade, the industry has changed considerably, and not just in terms of disappearance of big players. We've seen technology really come into the forefront here, right? Now, technology is constantly evolving. It has had a huge impact on the industry, and it's created new challenges, but also created new opportunities. And the main challenge now is really how to deal with the huge amounts of data that the technology age has brought with it. Now, data held by firms of all sizes has increased exponentially over recent years, meaning for firms to really operate really well and get the most value out of that, effective data mining is now a crucial part of a firm's operations. Another area of focus for technology companies has been, and certainly finance firms, has been, well, data needs to be stored, it needs to be stored safely, and there's been more emphasis on that since the 9/11 attacks, where, you know, I think the need for storage and disaster recovery and things like that have really come to the forefront. Firms have had to invest more heavily in cybersecurity, given sort of potential penalties for losing data, but also kind of the devastating reputational impacts if data is lost. Now, over the last 10 years, we've seen finance become increasingly globalized, largely due to technology. So if you look back not so long ago, London and New York were the main hubs, but these days Dubai, Hong Kong, Sao Paulo have all caught up. And now, you know, transactions can be sort of conducted across the globe at any time of the day. So what we've also seen because of technology is the biggest financial firms getting bigger, but it's also spurred opportunities for smaller, more specialist firms, driving innovation and helping create a huge number of jobs worldwide. Fintech firms in particular have been emerging over the recent years. You know, fintech's a great buzzword, but ultimately what they're doing is technology and finally applying what we've seen happening on the web to other areas such as retail and so on, to applications in finance. So, yeah, gone are the days when personal or even business banking were the sole domain of suited men in an office block in London or Paris. These days, you know, leading innovators in finance tend to be young startups, many of them breaking the established rules, understanding what's going on with like the millennial generation and providing goods and services that match the needs of that particular generation. Now that also online securities massively improved, particularly over the last 10 to 15 years, the trend is towards more mobile, right? So mobile is now the fastest growing platform for banking transactions for both individual and consumer businesses. Now, I can't remember the last time that I've actually logged on to my online banking. I do all my banking through mobile. I do all my transactions through my mobile apps or through seamless integration, right? So I want it to be faster, easier, but also it's through vendors I trust, going back to Michael's point. Now, looking ahead, this drive towards mobile looks set to continue, and you know, some people feel that digital currencies such as Bitcoin could start to grow in popularity and significance. Now, I'm still skeptical. Yes, it's popular, but the uptake of it hasn't really been there, and there's still some trust, some kind of operational, organizational issues to overcome with things like digital currencies. Now, should that turn out to be the case, the next 10 years could be as eventful as the past decade, where we've seen a lot of change. Now, things like Bitcoin, distributed ledgers have a potential to transform how we work and how we operate as a society. But for me, a lot of it's a lot of hype at the moment, right? Until we start seeing real-world practical applications that have the structures around them, we're not really going to, it's not going to perhaps move as, for example, VC investors might think it might move. Now, given the pace of change in the last 10 years, or even so given the pace of the change that we've seen in the last 10 years, thinking about what 10 or 20 years looks like in the world of finance is a quite difficult challenge, right? Finance is a slow beast, and I mean, if we look at some of us in the room are regulators, right? We are slow beasts. But in fact, technology moves faster than us. So when we think about things like RegTech, I always think that technology is always going to move faster than the regulations, and for me, there's a bit of a mismatch there, right? So this presentation is really going to focus on kind of the 6 key parts of the financial ecosystem, looking at kind of what some of the trends were to date, what question these trends sort of raise about the future, what some of the possible scenarios for the future are, and some key takeaway points for the future as well. Just to set the scene, this shows sort of global investment in fintech over the last 6 years up to Q1 2017. And you can see, I mean, it's grown, what, 5 to 6-fold over a 6-year period. So it shows the amount of technology investment and the pace of change and the opportunities that are presented in this space. Some interesting stats to set the scene for what we're going to be talking about for parts of the ecosystem. So by 2020, so 3 years' time, PwC did a survey, I can't remember what report it was in, but 28% of banking and payments, those people that were surveyed felt 28% of banking and payments businesses is at risk because of new innovations, new fintech development, and that's traditional businesses as they stand today. 22% of insurance, asset and wealth management businesses are at risk because of fintech, innovation, technology. And in 3 years' time, there'll be 20 times more usable data than today. Now, if you think about what opportunities that then gives us, right? So 81% of banking CEOs are concerned by the speed of technological change more than any industry sector. Now, you know, to put that into context, finance is slow, there's lack of collaboration, a lot of legacy systems, but here you've got technology coming through and making change while you've got these huge beasts of firms not being able to react to that change as quickly as they might hope. Now, 63% of insurance CEOs believe Internet of Things will be strategically important to their organizations. And obviously, cybersecurity will continue to be one of the top risks facing financial institutions. So 69% of CEOs are somewhat or extremely concerned by cyber threats. I personally think that's too low, but anyway. So let's look at the financial ecosystem. So for the purposes of this presentation, I've just cut it up into 6 parts. There's probably a couple of others like regulation and so on in there. But we've got payments, banking, lending, insurance, markets, and investment management. So let's take them one by one. And let's have a look at payments. So if you look at the story so far, so to date, the major forces shaping the future of payments were mobile payments, in the case of Apple Pay or Alipay, right? Now, interestingly, we'll go into this shortly, but Alipay has, I think, 30 times the number of users in China than Apple Pay does, but Apple being the most valuable company in the world. So I think there's about 60 million Apple Pay users versus 450 million Alipay users, which is quite an interesting stat. Payments rails, so new methods of payment, cryptocurrencies, Bitcoin, have kind of come to the forefront and are being increasingly used. And seamless payments. Uber's a really good example of that, where you don't even know if a payment's occurred. You just order your cab, you get in, and off you go. And then your card's billed, but you don't have to go, oh, I've paid for this. You might select your payment method, but these are the sorts of trends that we've seen. The questions that have been asked today have been, well, how might the dominant form, and these are the questions I kind of want to think about rather than sort of explore here. I'm just going to sort of pose them, where how might the dominant form factor of payments change? And will incumbent payment networks be able to respond to new entrants' payment infrastructures? What role will payments play in the broader suite of offerings from financial institutions? And will the rise of multinationals lead to global convergence around payments? So the trend so far has been, well, payments continue to migrate away from cash and become less visible as purchases shift online and to mobile. Payments businesses are experiencing intense pressure on margins in the face of competition and challenging regulatory environments. Regional distinctions between payments ecosystems are growing, so the Alipay versus Apple Pay is a really good example of that, where you've got different customer behaviours and regulatory environments emerging. But what hasn't really been the trend has been, well, mobile payments haven't been sufficiently exceeded by the functionality of pre-existing solutions in card-based markets. We're still attached to our cards, right? There's an element of trust there. And while mobile's becoming more and more the forefront because it's easier, it's more convenient, and works really well with certain services, we may use less cash, but we certainly aren't moving away from card anytime soon. And customer acceptance of non-traditional payment schemes remains almost non-existent. Now, there is a lot of hype that, yes, I'm using Bitcoin and I can use Bitcoin to go and pay for my coffee, but the reality of it is that we'll just whip out our card and pay with contactless, right? So that's been the trend to date. But what does that raise in terms of questions about the future? Well, will we see the future of payments diverge into two worlds, so a purely retail experience and a purely online experience? Or can they be bridged? Possibly. This seamless integration piece where you could potentially walk into a store, buy your clothes and walk out, and it's almost like the new Amazon kind of grocery shops. It's all seamless payments. It's a really good example of that. Who is best positioned to benefit from the monetization of payments data? That's a huge granular data set that is coming more and more available to merchants and so on. How do you monetize that, and who is best placed to do that? Now, will PSD2 create new payments value chains in Europe? Possibly. Will mobile payments ever capture a major sort of double-digit share of retail payments in card-based countries? Possibly in time, but it goes with the whole customer and user experience, right? And retail, all forms of retail will have to evolve to kind of change that experience. And what will the first national digital currency look like, and how far away is it? Well, depends on who you talk to. Some countries want to be at the forefront of it because that's they are in that kind of emerging infrastructure. They can make those sort of bold changes, but countries such as the UK, that's a much more difficult question to answer. So here's three sort of possible scenarios for the future of payments. So payments institutions turn from sort of cash cows to loss leaders, right? So issuers face lower interchange revenues, customers turn to alternatives for revolving credit, customers are conditioned to expect free payments. That could quite well become the norm, right? And payments choices for customers decline. We see more convergence, less providers. There's less money in it, right? Two ecosystems develop post PSD2. So banks develop their own open APIs, payment APIs. Merchants develop online payment tools that bypass intermediaries. We're already seeing a lot of that, and I think actually that's quite a likely scenario in that. The online retail payments ecosystem diverges. I think there's an element of that being true because some people just like to go into a shop, but a lot of people just want the ease and convenience. My wife, for example, will only shop on Amazon. Right? She doesn't go into the store anymore. But as their kind of experience evolves, she does more and more through that channel. And customers are entrenched in online ecosystems. Well, my wife's a really good example of that. Right? She does everything online. Increasing fragmentation. So merchants and intermediaries create personalised payment solutions, right, as we see happening in different regions. Customers adopt a wide variety of payment tools. So you've got things like, right now you've got things like PayPal or whatever Uber does, but customer preferences, their trust, the way they interact are rapidly evolving, and time, trust, content, speed, ease of use all play into all of this. Aggregated flows of data become difficult to acquire, and monetization of data becomes much more difficult. So here on one hand, we're talking about how you can make use of the vast data to kind of offer better products and services, but actually, if it's becoming difficult because of fragmentation, how's that going to work? So I think some key takeaway points from the payments piece is, if you look at three areas, so data monetization, so new competition, increased regulation will continue to make core payments activities less profitable, right? This leads to payment providers focusing on how to monetize data for key revenue, and actually the data itself becomes more valuable where they are granular, product level, multidimensional. Now, if you think of us from a regulatory point of view, having that level of data, granular data on payments, which gives you much more view across of what's going across the economy, allows you to make much more targeted and defined sort of decisions, give you more insight than what we currently get. If we focus on things like localized payment needs, so instead of designing payment solutions based on technology, institutions will focus on how their customers prefer to pay and design payment solutions that fit their customers' lives, which will lead to regional solutions. Emerging countries with that mature payments ecosystems will also take the lead because, like I said before, they're the ones who can innovate and take bolder steps. They're not having to redevelop existing infrastructure. And if you look at the power of the large merchants, so the ability of the large merchants to influence their customers' payment choices will grow, particularly on online transactions. and therefore their negotiating power within those payments ecosystems will grow accordingly. Right? And with the increased importance of product level payments data, merchants will also be able to wield this power to get lower fees, to influence the broader evolution of the payments ecosystem. And this, we'll talk about this later, well, I'll mention this later, but this gives rise to the kind of, we have significantly important banks, significantly important insurance companies. Will this lead to significantly important tech companies? I think so. So let's move on to insurance. So to date, the major forces shaping the future of insurance have been value chain pressures, new product needs. So Airbnb creates a whole area of new insurance, just through that offering alone. And increasing connectivity. So Nest provides IoT applications. I think in this case, they had a smoke detector that was connected to wireless that the insurance company would also issue, so they could do real-time tracking of fire risks, for example. Right? And the questions that have been asked today, particularly around insurance, is would the pressures on the insurance value chain continue, or would they lead to changes? Would insurance products change due to changing customer lifestyles? Would connected products reach mass adoption across all types of insurance? I mean, you see it a lot with car insurance at the moment. And how would the development of life insurance evolve as growth markets shift? So the trend so far has been, well, the value chain is under enormous pressure, and changes in purchasing patterns are forcing insurers to move away from the traditional one-size-fits-all model towards a flexible, customizable range of products. And we can see that in a lot of areas where you can get little micro-insurance for term things for very niche product sets. Increased modularity in the insurance value chain is enabling new combinations of players and threatening the position of incumbents. You do see that trend, but also you see the major insurers really kind of going, well, actually for them it's just a different way of packaging their products. I also question, while this is been highlighted as a trend, I question it, because actually what we see is insurers actually being a bit more dynamic in how they're packaging and delivering their products. You're seeing usage-based products based on demand, and object-specific insurance products are emerging, responding to customer lifestyles. And life insurers face pressure to reinvent their product strategies to meet the needs of the next generation of customers. What's not really been the trend? Well, while we're getting all these connected devices and Internet of Things devices proliferating, insurers have failed to convince customers that connected insurance serves their interests. So personally, I'm not one to get a black box in my car, because I don't want my insurance company knowing not that I do anything dodgy, but knowing how fast I'm driving, how careful I'm driving, where I'm going, and so on. It's just, they already know a lot about us, but that's just me personally. But I see where this trend that hasn't really happened is coming from. So what does that lead us to ask? Well, how will the insurance consumption model change as the sources and natures of the liability changes in the future? Should insurers change from being reactive to proactive, with the rise of connected insurance and the need to monitor customer risk on an ongoing basis? Potentially, I think it depends on what area of risk you want to monitor. I mean, monitoring a fire alarm to prevent the fire doesn't. What is the value in some of these propositions? You have to ask yourself. Will the industry be able to develop guidelines for the use of that data, and how will those guidelines differ around the world? Do customers want to engage with their insurer more often? I certainly don't. How will insurers match their life products to fit the different conditions in emerging markets? And will increasing integration and focus on prevention lead to success for connected products? Possibly. So, future scenarios we can consider, challenging the channel. So insurers improve their customer-facing digital experiences. We're seeing a lot of this, right? How they're packaging, delivering, how they integrate their insurance offerings with the specific products, right? So it's much more seamless. Sometimes you don't know you're getting insurance, but it's built in as part of it. And consumers benefit from products being tailored to their needs. We only want to pay for things that, I'm very specific in the insurance that I want from a particular company. I don't want X, Y, Z, but I also want to know that I'm trusted to get the things I'm paying for. I'm not going to be subject to some fine print, right? So these things are going to be easier and seamless. Underwriting by machine. Now, if you're getting a lot more complex products, new products coming to market, underwriting becomes increasingly complicated, and it strengthens the role of an AI could play in that. Third-party underwriting for AI expertise will become the industry standard. And insurers, two diverging paths will be created for customers, and insurers will face a battle to differentiate themselves. We'll see the rise of the flexible products, so prosumers, not consumers, will force insurers to connect business and personal insurers. Insurers will use technology to enable time flexibility. Insurers engage with consumers to monitor coverage, but customers may be caught off guard by inconsistent coverage. Now, this is down to T's and C's and how well these products are explained. Life insurance, so easy life insurance. So insurers develop digital channels for product distribution. We're seeing a lot of that already, but that will become more and more prevalent. Term products rise in popularity as demographics shift. And life insurers will deprioritize agents and investments and may go direct. So key takeaway points for this, the value chain shift. So once tightly vertically integrated, the insurance value chain is rapidly being modularized by sort of new technologies that allow activities to be split across a lot of different players. And leading organizations are using this modularity to their advantage. So they pursue flexible partnerships that allow them to aggressively compete for adjacent profit pools. You've got a lot more complex products that are then simply distributed. So to remain competitive, insurers need to simultaneously achieve two seemingly contradictory objectives. On one hand, they must develop complex and highly personalized products to meet customer needs, and on the other hand, they will need to significantly simplify the origination process, enabling even highly complex products to be sold directly through online and mobile channels. But communication for me is key in all this, making sure that the end customer understands what they're buying and how, and they're getting what they have signed up for is key. So trust is going to be key to delivering all of this. And connected insurance will fundamentally change the way insurers operate, shifting their focus from risk assessment to risk prevention, and perhaps creating the imperative to work with original equipment manufacturers to build in connections. Now, to do this, they must overcome kind of existing perceptions of connected insurance and convincing customers that actually they represent an improvement over current products. There is an apathy amongst consumers of insurance to actually change or move away from the norm. And there is a trust issue there as well. Digital banking. Well, this has been an area that has really changed rapidly. So today, some of the forces shaping the future of banking have been virtual banks, like Fidor or Monzo, for example, in the UK, mobile banking channels, or banking platforms. And the questions that have been asked today around this, would virtual banks be able to capture market share for incumbents? How would the emergence of banking platforms affect developments in digital banking? How would banks be able to deploy digital solutions with a legacy architecture? Right? For me, the first and the last one are kind of really important questions on that. And if you look at the example of some new challenger banks within the UK, some of them started around 2010. They haven't made a profit. They finally, in 2017, are now turning a profit. Which has taken a while, but they are gradually building market share. So trends so far. So traditional bank distribution models and economics are at risk of being deeply disrupted by the drive towards platform models of banking. Banks are no longer defining customer expectations of the banking experience. Instead, fintechs and large tech companies have set the standard. And fintechs and large tech are used to making things easy to use, making things seamless. And we as consumers expect things to happen at one click or seamlessly. And banks have had to kind of get with that, right? Incumbents are starting to migrate core systems to the cloud as legacy infrastructure creates challenges in meeting customer needs. And this is an important step to allow incumbents to be more agile, move away from legacy systems and so on. And as I mentioned, fintechs are now setting the level of expectations that customers have for banks. And with the emergence of platform banking models, banks are trying to evolve but are weighed down by legacy systems. So, but unfortunately, these shifts from legacy infrastructure to cloud or wherever it might be do take time, whereas fintechs start from that position already. What hasn't really been the trend? Well, few customers have really moved away from the traditional deposit accounts despite significant efforts online and mobile challenger banks. So what did these sort of trends raise about the future? Well, will PSD2 be a game changer for the industry in Europe? I think so. As you move to building more API-based smart infrastructures, smart financial centres, I think actually something like PSD2 could be a really positive catalyst for that. And we're seeing that, for example, in Singapore, where actually they want to build a smart financial centre, a whole API-based infrastructure, and certainly a lot of their government services, if we look at that, are based off API services, which actually you can pull up on your phone. You have one app, you can access all your government services, that API out to all the various different departments, and you can have your water sorted out at the same time having your trash collected. So this is the world that we're moving to. Will customer interest in open banking models continue in light of growing cyber insecurity? What are the bank's business models for large tech companies expanding into banking? I think a lot of them are now showing that they want to do more payments. Facebook, for example, has indicated it wants to get into the payment space, whereas so has Amazon. How can incumbent banks transfer their competitive advantage to the digital world? And what partners will banks choose to set up their long-term digital strategy? So these are really important questions for the future of digital banking. Now, to kind of focus on a couple of scenarios again, we can see the emergence of things like controlled, curated platforms. So banks will outsource product design for less profitable products. Banks form collections of best-of-breed products from various sources. Customers benefit from diverse and customized product offerings. And fintechs focus on white label and co-branded products that they could actually then supply to incumbents who can then brand it as their own. We'll see things like tech aggregation platforms. So large tech firms create distribution platforms. Fintechs and smaller banks extend partnerships with large tech firms. Customers embrace the ability to purchase from large tech firms. And incumbents are forced to decide whether they join tech platforms or stay isolated. And I think actually they will have no choice but to do that. We'll move to an open platform world. So legislation or customer pressure forces banks to use open APIs. Third parties use APIs to develop their own products. New entrants directly compete with traditional bank products, and financial institutions choose to focus on single segments of the value chain. Some key takeaways. So distribution versus manufacturing. So the rise of product platforms and digital banking will force market participants to make a choice between a strategic focus on product distribution, i.e. becoming the platform, or focus on product manufacturing. This choice will have far-reaching implications for their business and customer interaction models, as well as their competitive landscape. There'll be fewer but bigger winners, so the advantage of being the market leader will increase significantly for both product manufacturers and product distributors. Platforms will offer customers improved transparency into products, significantly increasing the advantage for the best products. And for distributors, significant economies of scale and access to data and customer awareness will feed a cycle of growth. And then ecosystem imperatives. So under all these sort of possible end states, digital banking institutions will forge more relationships with other financial services and increasingly non-financial services firms, meaning that within the digital banking ecosystem, a proficiency for establishing partnerships and a willingness to create win-win symbiotic relationships will lead to more partners. And collaboration and trust is key for the future digital banking. Lending, another exciting area. There's been a lot of development over the last few years. Now, to date, the forces shaping the future of this have been mass P2P lending, credit ease, and so on. Alternative adjudication, so companies like Cabbage, and lean and automated process, the Lending Club. Now, the alternative adjudication one is a really interesting one because it means it provides a means for people who are less credit worthy, who haven't had good credit histories or so on, to find sources of cheap, inclusive lending. And the questions that have been asked today have been, well, would incumbent lenders react to new entrants' speed and prowess? Would low credit or thin file customers, i.e. those needing alternative adjudication, benefit from alternative adjudication services? And would P2P lending be able to grow and compete with traditional banks? Now, what's been the trend? Well, new adjudication techniques have significantly expanded access to credit for underbanked, thin-file and subprime customers. Individual and small business borrowers expect their lender to deliver the seamless digital origination and rapid adjudication pioneered by leading fintechs. Non-financial platforms are emerging as an important source of underwriting data and a point of distribution for credit. And fintechs are using data to provide customers with a pain-free lending services. And customers want the same efficient, seamless experience with their banks. Additionally, consumers can choose from a multitude of financial and non-financial providers. What really hasn't been the trend? Well, funding economics put marketplace lenders at a cost disadvantage compared to traditional banks, raising questions about the model's sustainability. And fintechs are struggling to find a sustainable business model in the face of funding instability. So, what does this raise about the future? Well, how much more effective will underwriting become with new sources of data and analytical techniques? We talked about before that underwriting will have to move to become much more AI-based, and with much more data, I believe it will become much more effective, but also cater for the types of complexities you're dealing with in this space. Will platform-based lending become a relevant distribution channel? What is the long-term impact of marketplace lenders licensing their underwriting technology? Will marketplace lenders move to provide direct lending? And how will the borrower's preference of distribution channels evolve? Now, some interesting stats around kind of P2P payments and lending. 44% of those people earning less than $75,000 would trust a tech company to do their P2P payments. And this goes up to 68% for those those earning more than $100,000 who would also trust a tech company to do their P2P payments and lending. So those are quite interesting stats, I think. So possible future scenarios. You'll have different evolutionary paths for lending providers. So marketplace lenders are challenged as funding costs rise. Marketplaces are further specialised in target niche areas. Other marketplace lenders seek to become banks. Customers benefit, especially in niche areas. Now, shared services providers. So certain marketplace lenders become B2B service providers. Banks find service providers more capable and cost-effective than their own internal functions. Service providers flourish and become indispensable. And the industry's cost base becomes commoditised. Distribution 2.0. So lenders form partnerships with non-financial firms. Non-financial firms use their platforms to originate loans. Lenders begin to offer more customised products using additional data. And consumers benefit from loans at the point of need. So key takeaway points around lending. So lower funding costs will win. So despite innovations in origination and adjudication, the online lending model is fundamentally limited by high unstable funding costs in its ability to compete with banks. So there's a need for a consistent funding source at a cost similar to that of deposits for banks, or otherwise it will drive online lenders to acquire banking licenses, right? Unless they've got alternative sources of funding. Finally, lending will go digital. So marketplace lenders and technology firms have reoriented customer expectations. Leading lenders are expected to offer simple credit origination experiences where a combination of design and automation provides customers with a frictionless application experience and swift response. And lenders begin to use data more effectively. So leading lenders are using data to improve both the effectiveness and the efficiency of their adjudication processes. They employ new sources of data to underwrite applications whose risk could not be previously assessed, i.e. thin file, under subprime customers, and reduce underwriting costs by automating the collection and analysis of key data. Moving forward, lenders will increasingly look for new signals and data to inform lending decisions. On to the last two, so we've got investment management and then market infrastructures, and then to cover off. So around investment management, to date, some of the forces that have been shaping the future have been the rise of robo-advisors, big data-driven analysis, and B2B externalization. Questions that have been asked today really have been, was robo-advisory the right answer for the majority of customers? This is mad rush towards automating everything and not talking to humans anymore to save costs, but at what expense? Now, how would companies look to B2B externalization as margins continue to decline? And would monoline fintechs be able to capture market share? What's been the trend? Well, as individuals become more responsible for their investments, robo distribution has become the most compelling tool for customer engagement. Scaling the delivery of investment advice requires fewer resources as middle and back office functions are increasingly being automated or externalized, and the growth of low-cost products has increased the importance and scale of product manufacturing, driving pressures for consolidation. Now, what has been the trend? Well, new entrants to investment management have struggled to gain market share in the face of customer stickiness and high customer acquisition costs. Trust is a big factor in this. There's a reason customers are sticky, right? I'm not going to move from my own investment provider, right? And also, if I want investment advice, I want to talk to someone I can look in the eye that I will get advice from. That will vary by person, but that's just my own risk tolerance. But you can see why this hasn't really been a trend. So trust is going to be a big key. What questions do these trends raise about the future? Well, to what degree will product manufacturers move upstream and disrupt distributors? Probably more likely. How will wealth managers differentiate their robo-advisory offerings? For me, this is going to be down to the quality and detail and credibility of the advice that they offer. Will clients continue to prefer low-cost investments, or will guaranteed outcome products become popular? Do people really have the attention span to keep monitoring their investments, or they just want to go, you know what, I'll put my money here and I know I'm going to get X amount at the end of the term? I see that being more of a trend. How will the role of human advisors and their job requirements change? That's a really interesting one. And will product manufacturing be characterized by more or less scale? Some possible future scenarios. So you're going to get certainty-based offering. So retail clients will have less access to traditional pensions. Potentially, retail clients will become more attractive more attractive segment than institutional clients. Robo-advisors condition clients to expect certainty. I think that's probably true. If I'm going to have a robo-advisor, I will want to know what I'm being given, right? Asset management develops and delivers guaranteed outcome products. For me, this would be a really good end state. Now, advice is a differentiator. So clients, especially millennials, flock to robo-advisors. And algorithm-driven interfaces expand across multiple asset categories. Wealth becomes a primary point of interaction with financial institutions, and data sharing agreements become much more important to understand consumers. That last one is really important, I think, for the future of this particular space. Quality externalization. So more and more cloud and platform as a service providers emerge. Benefits of scale erode as high quality execution becomes the norm. Much of the market gets consolidated into large firms that can afford differentiated technology, and many specialized smaller wealth managers thrive by appealing to niche markets, and we're seeing a lot of that. So some sort of key takeaways. So differentiated offerings. So the ongoing industry-wide automation and externalization of middle and back offices, combined with the ubiquity of robo-advisory offerings, are commoditizing the investment and advisory value proposition. Consequently, leading firms will seek to identify and invest in other ways of differentiating themselves to stand apart from their competition. Now, advice-driven customer guidance. So as robo-advisors become more ubiquitous and sophisticated, leading investment management companies will look to these capabilities to deepen their engagement with robo-advisory customers, drawing on new sources of data to deliver advice on all aspects of their financial lives. Importantly, I think humans are still going to have a role, right? So the human advisor will still be crucial when differentiating products and services, especially for high net wealth customers. But the role of such advisors will shift in leading companies from product selection to focusing on customer engagement, building trust, and emotional intelligence, and decision support. Let's move on to market infrastructures as the final kind of piece in this jigsaw. So the major forces shaping the future of market infrastructures to date have been capital requirements coming from the BIS, new platforms for OTC markets, and market regulations. And the questions that have been asked today have been, well, how would electronic platforms develop and which assets would be digitized? What effect would continued regulation have on the development of new trading tools? And how would incumbents seek to respond to new technologies used by startups? What's been the trend so far? Well, traditional OTC products continue on their journey towards digitization, driven by regulation and the promise of improved economies of scale. The efforts of electronic platforms to scale up are complicated by an uncertain and regionally fragmented regulatory environment and political instability. And market infrastructure providers are disrupting themselves to preserve a pivotal role in future processes and unlock new revenue streams. Now, what hasn't really been the trend? Well, new platforms have rarely challenged incumbents, and instead see joint ventures and partnerships as the most successful path to scaling up. Yeah, there's been a lot of talk of disrupting incumbents, but the reality really hasn't been that. So what questions do we want to ask about the future? Well, what will political disruption and potential deregulation mean for the platform trading and proliferation? How will buy-side investors demand for innovation and new business models to shape the platform universe? How far away are disruptive technologies such as AI and DLT from applicability and scalability in a production environment? AI perhaps less so, DLT's got a fair way to go, I think, my personal view. What will drive the necessary cooperation to embed new business models into the existing ecosystem? And how will disruptive technologies affect the value chain and individual roles in market infrastructures? So, possible future scenarios here. So, if you look at platform proliferation, market platforms enhance their tools and standardized languages. Trading in many asset classes becomes easier. Market participants adopt platforms en masse. And platforms continue to innovate as usage rises, thus consolidating their market position. You may end up with some data infrastructure collision. So data-focused firms expand within the platform area. Infrastructure providers leverage information custody to provide data services. As a result, these players find themselves on a collision course, right? And users increasingly have fewer providers for both data and for infrastructure. Will we see new post-trade value chains? Well, infrastructure providers disrupt the capital markets value chain. Improvements lead to new market structures. Some entities leave the ecosystem while others redefine their role. I think we'll see a lot of that. And additional resources are freed up by improvements to processes. We'll definitely see a lot of that. Some key takeaways for this. Well, technology alone is insufficient. So new technological solutions are insufficient to enable the creation of new market infrastructures or to drive significant change in existing infrastructure. This will make minimum viable ecosystems of cooperating stakeholders critical to development. Now, leading players from both the public and private sphere will seek to actively participate in and shape the direction of these stakeholder groups. Navigating regulatory regionalisation and uncertainty. So, we're seeing this a lot at the moment, where differing regulatory direction around the world will likely lead to both regionalisation and uncertainty in the short and medium term. Financial institutions will need to develop the flexibility to rapidly adapt to both large-scale regulatory changes and regionally divergent regulatory treatment of emerging market infrastructure technology. And value chain pressures and opportunities. So regulation and technology advances are driving efficiencies, which will put pressure on incumbents to consolidate their positions and thus shorten the value chain. Forward-looking firms will seek to position themselves in areas that will continue to add value and increase areas currently occupied by other firms. So just sort of wrapping that up, I hope that was a sort of good. There was quite a lot to take in around the sort of the 6 aspects of the ecosystem and looking at kind of trends and where we've ended up to. Hopefully, you kind of stayed with me with that. But I think going forward, rather than talking about kind of what we've talked a lot about what might happen, it's important to talk about the forces that will shape the future financial ecosystem rather than kind of, because they're the ones that are going to drive the trends and what may happen. It's very difficult to predict what's going to happen in 20 years' time. But systemically important tech companies, right? We will have banks, insurance companies, they're all systemically important. The tech companies are going to be there, right? You may find your PayPals, your Facebooks of this world become subject to regulatory scrutiny at some point, right? There are regulators who do on-site technical supervision of their firms, right? But this may change, the supervisory remit may change. Also, the line between banks and tech companies may become blurrier over time. So the role for us as a regulator, where our supervisors will need to become perhaps more tech and data savvy than they currently are. And my personal view is that in this day and age, it's no excuse for a supervisor not to have any tech or data experience, or to say, well, that's the job of a data or a techie person, and almost kind of dismiss it. It's their job to understand that too. Cost commoditization, you know, we're not in the world of big profits. Consolidation, TCO, you know, making things commodity are going to be really key to understanding how the future evolves in terms of new tech. Profit distribution, experience ownership, the rise of platforms, monetizing data. You know, if in 3 years' time we're going to have financial firms are going to have 20 times more usable data than they have today, data monetization is going to be absolutely key. How do you get really good insight from the data you're collecting, and who's it useful for, and what does that allow you to kind of develop from? Bionic workforce. And I put that on to be slightly controversial, but that's kind of this whole robo-advisor, human advisor type thing, not kind of a cybernetic kind of person who's sitting behind at your bank. Financial regionalisation. So, you know, all of us have been contributing to the new global sort of frameworks for reporting, but we are seeing regionalisation happening. It's not to say global rules don't have a place anymore, they do, but also different regions will have their own uniqueness, customer experience, kind of cultural things that that will influence how the technology evolves. And lastly, the important thing is the sharing economy. We're seeing more and more sharing economy, renting economy taking place, and I think this is going to be a big trend in how some of these products evolve as well, and all these ecosystems evolve. And that's it. So it's not my usual sort of presentation. Hopefully you found it interesting. Thank you. I'll take questions if you have any. So.
Benjamin, many thanks, because this is pretty much exactly what we spoke about, to take a look at what is there and what could we expect in the future. Any questions from the audience? I think we'll have a few, because that pretty much set the background for the entire discussion today. So.
Thank you. That was an absolutely fantastic and thought-provoking presentation, where I'm not even sure whether some of my thoughts are in there or not. There was so much stuff there. So here's my question. Maybe it's under sharing economy. So for the camera, this is not true. I am thinking of starting a new insurance company. Excuse me. I'm thinking of starting a new non-insurance company called I Can't Believe It's Not Insurance. And Liv says, I am so tired of paying the exorbitant fees for life insurance. If you could give me a policy at half the cost, that would be wonderful. So she enters into an agreement. And then Michael and Ignacio and Wadasan and I, we all pick up and we say we will receive through smart contracts a portion of that. And smart contracts, if the transaction is registered that a life event happens, will take the cryptocurrency from our accounts and pay off. And it's not an insurance company, it's a sharing economy. It's I Can't Believe It's Not Insurance. Was that in there? Is that sharing economy? Is that encompassed? Whether it's banking on the one side or the insurance on the other, is that a possibility? Will regulators stop that? How does that work?
So, I'm not doing it. Okay. Yeah. So on the point about would regulators stop that, I can't comment or won't comment on that. But that what you described is encompassed in how I see the ecosystem developing, because there are some interrelationships between what one part of the ecosystem can expect and how that affects the other. And certainly when you come through things like the sharing economy and those forces, that does capture the sentiment of what you're describing. So this was not saying, it's not going to be very binary. It's saying these are sorts of the forces. Now, it's an ecosystem, so a force on one side will affect the other side, like the butterfly effect of a hurricane, for example. So I think what you described is generally is captured in there. I mean, I heard of a proposal around, for example, same sort of idea where I can't remember who it was, someone from this community anyway, was saying they were driving down, well, their boss was driving down the road one day and didn't take out, they hired a car, didn't take out windscreen insurance, got a chip, and then had to pay like £1,500 out for that chip. And they thought it was really unfair, but actually what if there was a way of doing what you described in terms of, well, actually, rather than pay, there must be some fund I could pay into where actually I wouldn't have to pay £1,500, but I would have to pay about maybe £50 to get it repaired, but I paid into this kind of share of the fund where if something like that happens, I can draw on that, and the community can decide whether to authorise that payment or not. So yeah, I think you'll see a lot of that. But then there is the fact that people are kind of, their attention spans are not really there. They're less patient. Have they got time to be this kind of insurance judging community, or who's going to be that person who says, yeah, actually, we're going to approve that transaction as part of the community? So there's some things that are going to, I think, societal changes that will come about from this. I mean, it's the whole kind of blockchain argument as well, saying, yeah, it's going to do away with all the market infrastructures in the next 5 years. Well, these things have been built up over 25 to 30 years. There's a whole society dependent on it. Now, if you can't, you can change the technology. If you can't deal with the societal impact and the cultural change of it, which is actually the thing that will slow everything down, then actually it's not going to, things may not change as fast as you might want them to. Some things may change because actually it's the right thing to do and they get quicker adoption. But other things do require cultural, societal change. So, does that answer your question? Any other questions?
Any further from the audience? I'll have one. I'll go back to one of your points. Oh, sorry. Oh, yeah. Okay.
Yeah, that's me.
Hi, Ben. It was a very interesting presentation, and I've millions of questions, but I'll ask you three. The first one, you mentioned about 9 different factors at the end.
Yeah.
There's no mention of identity management in the context of trust. So just maybe get a comment from you on that.
Okay, let's do one at a time.
Yeah.
So I purposely didn't put identity in there. That's better. Yeah, I didn't put. I've stayed away from specific bits of technology, but you're right. Having a digital identity is key. So that the way that evolves would be a force, but I wouldn't say it's the trends I sort of described were sort of bigger, more macro type forces rather than specific things. But you're right. Identity management is key to a lot of that. To kind of enable that change that you want to see throughout the ecosystem. If you want more seamless payments or lending, or these kind of adjudications on insurance products, yeah, you'll need that constant digital kind of identity through that. But I think that will come through that evolution of technology. Yeah.
Okay. Another question for you then. You mentioned as well about the concept there of, I can't remember the exact words you used, but effectively it's defined outcomes, so guaranteed outcome products.
Yeah.
Is that not effectively a recipe for a Ponzi scheme?
Could be.
Yeah.
Could be. Yeah.
Okay. Because that's.
But then
it struck me because
I could get controversial and say, well, actually,
yeah,
there's a lot of Ponzi schemes out there that are legitimate. So.
Okay.
But you're right. I mean, this is we had this thing. I think in the UK, something to do with mortgages years back. I forget what they're called, but my dad fell for it. So.
Okay, and a third one then. You mentioned as well about IoT and insurance, and let's say connected products and connected insurance and whatever else. And it seems from what you spoke about that the customer was the person most likely to be the, let's say, the barrier to those type of products becoming popular. In my experience, it's as likely to be the insurance company as it is to be the customer.
Yeah,
and I think that a lot of insurance companies and potentially other, let's say, incumbents pay lip service to be seen to be involved in these, let's say, new areas of technology, but don't actually bite the bullet and go and actually do anything about it.
That's a very true point, because I mean you've got your more tech savvy companies like Aviva and so on who are going down that route, but also not really being obvious about it. They've either partnered or got products that don't really look like theirs. But if you get into London market insurers, right, who are really old school paper-based kind of books, you know, banging bells at lunchtime and so on. If anyone's been to London market, it's a fascinating building, really weird, old world kind of London finance. But you're right, I think you're not going to see that move within there, but they often deal with a lot of these niche products, being London market. But they are the sort of thing where the agent or someone wants to have a direct conversation with someone and have the handshake in the pub. But that might change in time. I don't think a lot of that's going to go away though, because there is an element of trust where you're doing deals on specific niche products. You want to know you're covered, and that kind of that drink you have with that guy you know in the pub is that trust that, you know, automation or a machine can't replicate. Like I said, I want to look someone in the eye. If I'm giving them my money, I want to look them in the eye and go, yeah, I'm happy to do that, or I trust you, you're going to look after me. I'm all for technology, I love innovation, but I still don't get how you're going to overcome that one piece, and I think that that's where you'll see a lot of change, but ultimately it'll come down to me looking someone in the eye, knowing I want to do business with you or not. So, but then again, 10, 20 years is a long time. So, you know, I might have a virtual person pop up, but I can look in the eye. So,
thanks very much.
Thank you, Declan.
Daniel, did you have some
I have one, but it's not directly, but I think you're a good source of info. Which is the feedback after 2 years of being aggressively deploying sandboxes? How do you feel with it? Do you see it as a successful approach?
So what the FCA do is a sandbox. What we do is an accelerator. The accelerator is But what we've done is we've looked at technologies not to promote fintech or anything like that, to look at how those technologies would help us as an institution. And we've done a number of different proof of concepts. We're in our 4th cohort. I think I can say this publicly now, but we're doing a POC with NTT Data and Wadassan at the moment on XBRL processing and data management. But to date, we've done things on things like distributed ledger, machine learning, privacy, data aggregation, and so on. Now, we've done proof of concepts to understand, to answer questions about technology that we don't really fully understand, that will help us make decisions, big decisions. RTGS is a good example. So everyone went, well, you should just do real-time gross settlement on a blockchain. Well, that's great, but Ethereum's not developed enough. Would I put RTGS on the Bitcoin network? Probably not. Ripple was just in its sort of fledgling status at that point. And then you've got all these other new offerings that are coming along. What that did was up until then, everyone in the bank, other than technology, were looking at the technology and doing paper-based assessments, going to a conference. And in 2015 and 2016, and probably the first part of this year, every single presentation on blockchain and DLT was, what is blockchain? What is DLT? This is what it does to you. And for 2 years, you couldn't get past that conversation because every single person out there was the expert because they gave a presentation on what is blockchain. The only differentiator in all the conferences I've been to was when Ann Binney started talking about financial inclusion. This was in the XBRL conference in Singapore. And that was the first time someone had said something different about DLT. Now, for us, what it did was it stopped those questions. It educated our sort of business areas and notes and RTGS and across the bank to say, what is this technology? And we did that through a very simple proof of concept, which some of you might have seen. No, actually, no one's here. You saw it, yeah, you saw it. And that answered a lot of questions that said, well, actually, this is what technology does, this is what it doesn't do. And rather than steaming on to going, well, how do we do debt versus payment through this proof of concept? Actually, we've learned enough about this. What's the next thing that we want to go and answer? So we thought, actually, what we want to do is make sure that the decisions we take around RTGS mean that it's blockchain compatible with the future. So we did a proof of concept with Ripple, where we created a kind of, we did an international settlement using Ripple as an intermediary. And the next one we're doing to blockchain is with Chain, which is around exploring privacy. So it's taking the really key questions. So some of it's been around education. Some of it's going, well, actually, we're really interested in how machine learning would work across regulatory data and for the supervision of credit unions, right? It's 500 very sort of mid to very small firms, report once or quarterly or once a year. Data, if you could automate the supervision of through machine learning, would be great. So we're doing some POCs on that. We did one, we're doing a second one with the same thing. So what it's doing is teaching us the direction we want to go in. Some of it's been educational, some of it's been, all right, this is the direction we want to go in. There's other applications like we did for cybersecurity, where we did with Palantir. That became a product that we're using within the bank. So that Palantir runs some of our cybersecurity stuff. It basically watches us all the time. So if I move a file from A to B, it knows that I've done it and will say, oh, you shouldn't have moved it to B, and flag it to someone in the organisation. So we are heavily monitored by that. So there's some things that we've brought in. Other things we're looking at to see how they might be used, right? So Enforced is a company that mines a lot of legal text and looks at those things. They're very good for our legal and supervision team, so we're looking at how we might take them forward. Privitar was another company that did an external cyber security assessment, I think, of a firm, saying, well, based on all these external data that it's getting about a firm, they're saying, well, actually, this firm's low risk, high risk in terms of kind of, or that their kind of controls are weak or good. Personally, I don't see too much value in that one, because how much can you really tell from an external profile about a firm's cybersecurity, because that's all internally facing and kind of locked down, but that's a different issue. So 2 years on, it's been really useful, but 2 years on, we're going to go, well, what does that mean going forward? We can't continue doing the same thing for 2 years, because if you look at what other institutions are doing around the world, they're all moving forward, they're coming up with policies, some out of necessity. So the EBA published that paper. No one's from the EBA here, so that's fine. But largely out of, you've got all the other institutions, EIOPA, everyone going, actually making progress, having conferences, talking about stuff. EBA really haven't done anything on this yet, so they published this paper or said we're going to focus on these things. But some of it is reactionary, some of it is genuine. For us, we haven't published any kind of, this is how we might regulate it, or this is what our policy is in relation to this. And I think we're still very open, because we don't want to come in now while it's still fledgling, particularly with Brexit looming, and saying, let's kind of put a wrap around it. We want to see where it goes, where the risks are going, because they change day by day. I had a conversation with supervisors the other day, and I was in our fintech working group, and they were talking, well, they were assessing the risks that APIs pose. I sort of was a bit baffled. I mean, my API is just a technology for these two things to talk, or these multiple things to talk. So yes, there might be risk in the technology, but the risk is actually in the business model that you put around it, not in the tech. But they were assessing the tech risk, but they're not tech experts. So this is the sort of, so for me, it's also 2 years on, it's about positioning me and the rest of us in technology as kind of the advisors to the business areas, and so they don't have to pretend they're the tech experts. They can actually just come to us for advice. So at the moment, we are reassessing what the future of it would be. I would say the focus is going to be around digital banking and around RegTech. This isn't public, but we've pushed for those two things to be at the top. RegTech, for me, is a big thing. So, yeah.
Can I?
Does that answer your question?
I know we've extended a little bit in a very agile spirit the time of your session, but I cannot really not ask one particular question that relates to your presentation. You've touched on a number of points on the human interactions and the human factor, so to say, in all these considerations for the RegTech. What comes to my mind is actually yesterday, when I introduced the welcome words for the conference, I highlighted that building the trust in ecosystems is in equal measures a social function and a technological function. Regulation, standards, technological solutions, and then perceptions, emotions, fears of humans, innovation aspects, and so forth. In the evening at the beautiful Palazzo Terrazas de Cibeles, and thank you very much to Maria who very kindly organized that, we chatted a little bit about this new concept someone posted, I don't remember which company, assessing data not on the factors of true, false, or the binary factors of 1.0, but instead assessing data by emotions, a sort of like a spectrum of emotions given to people, and they judge the data by emotions. And Ignacio very nicely commented on that if you introduce that, then it's a very, very fast-forward way to receiving a lot of, or promoting a lot of individuals, such as a very particular gentleman from across the pond with a very strange blonde haircut, right? Posting a lot of those Twitter very weird messages and actually affecting the emotions of people through these kind of things, through the post-facts, alternative facts, and so on. Now, my big question is the RegTech disruption going to be disrupted by the technological fears of people and the emotions of people who don't really trust the technologies nowadays? They are scared of the technologies. There is a big gap between people saying, I will trust the AI solution giving me advice. I will trust the robo advisor giving me advice. I will rely on a cryptocurrency as a means of exchange of value. There is this massive gap to my understanding. What would be your vision of that, or your view?
So I agree with all the things you pointed out, is where that comes in, right? And emotion can be easily influenced. And if you're doing point-of-time decisions on emotions, emotions aren't, you have 10 of them. You might have one leading one, but it's influenced by several others of which you don't know what the combinations are, right? So the decision-making that drives emotion-based is particularly, is very nuanced. On the RegTech point, distrust in technology, I mean, I see this all the time, where we are trying to enable RegTech as an institution. We're only focused on reporting, but what that does is it creates, I mean, the simple view of getting rid of someone's table view in Excel and giving them access to all the data that they can combine in any way they want is such a shift that they go, oh, I don't want that, I don't like that, I have to think, I have to do something, I can't just read. And there's such an aversion just to that, where people think that technology is still this alien thing to them, that even though they go onto their phone and it's simplified, the simplification of this technology, or sometimes the oversimplification of technology, if you look at Apple products, means that people don't have to think, they don't think that they have to think about technology data or not have to understand the underlying implications, because everything's just instantaneous. But it's that view of this instant culture plus some apathy and cultural change that I wouldn't say it will disrupt RegTech, it will just hinder progression. That train is in motion, right? Things have to be easier, they have to be faster, they have to be cheaper. And eventually people will just have to get out of the way, but they are going to be hindering it. Now, what we're seeing, I would say 2 years on to Daniel's point, is it comes down to comms and awareness. So the accelerator work that we're doing, but this even goes out to the public, is actually educating them more on technology and data will really help. And it's a comms thing, right? Will really help kind of build that trust. But you have to talk to people about it. And they have to understand what they're getting from it, why it will help them, why it's better than the old way, or if it's not better than the old way, well, why should you have it more automated or things like that? Will it give more transparency? If you're not communicating those things and the why, I mean, where's that transparency don't really mean a lot of people, unless you're working in our sort of circles. Yeah, we get transparency, we have to do it every single day. But if you go and see what transparent means to a guy on the street, they're not really going to care. So it's how you communicate these things. So the human element will always be there, is communication, and I don't think at the moment, if you're making data decisions on emotions, that's also tricky. That will influence how you trade and people's state at that point in time, but it is tricky, I think. But yeah, for me, communication is key to all trust things. If you're not talking to people, making them understand, it's not going to work.
Okay.
So maybe the last, probably, but I think it will be quite simple to ask, but probably not that easy to answer. We are hearing a lot of information about the RegTech, and let's just assume the RegTech in the space of compliance. How do you feel, what is your feeling about the risk transfer or risk being shared between the banks, insurance, and the RegTech companies that are helping, let's say, to solve the compliance issue? So in this case, how do you see who is responsible in the end? Of course, you can say that it is the bank or insurance, but do you have some kind of a perception that maybe at some stage the RegTech companies will also have to be supervised, at least in some areas? Or what is your perspective for that?
I had this question at a conference I was speaking at on Wednesday. Literally the exact same question. Luckily, the guy from the FCA was talking about it because that's mainly his area, but I did share his view. So firstly, it's the banks that are responsible for compliance. RegTech software is just software, right? So I can see Invoke in the room, right? So Invoke is a software company, and so I'm calling you out. You provide software to insurance companies and banks, right? Arguably, you're a RegTech, right? So Advisor, so a bearing point if they're in the room, right? Because that's how everyone's being branded. But they provide the software, and you're responsible to ensure that it works and the output you generate works, right? Such that my system will accept it. But the data that goes in and the compliance aspect of it is solely, this is my view, sits with the firm. Should a tech firm be subject to regulation? It depends on what they're doing. If they're doing reporting solutions, no. If there are checks and balances around, for example, monitoring of chats to make sure there's no insider trading and things like that, possibly. But then it's not the software company, it's the firm's controls and how they've implemented that software and their audit trails. Now the software is just software providers are just enabling that. There's a lot of questions around whether things like cybersecurity is the same thing. You know, you could have the best cybersecurity thing in the world, but if your firewalls haven't been implemented properly by your infrastructure team, whose fault's that? Right? It's not the cybersecurity firm. It's the fact that you didn't do your firewalls properly. So there are things around that I think all compliance is a firm from my point of view is a firm obligation. If the software company is straying into that arena, or they're completely outsourced to provide that function for the bank, it's still the bank's problem to make sure that the firm that they've outsourced to is giving them the right thing. So there are times where we might look at cloud providers, right? There is, people have been talking, at what point does that create a risk to the system as a whole? Unless software providers are providing kind of specific things that become critical to the financial stability of things, then I think those questions will be asked, and that will fall mainly into infrastructure providers, cloud providers, data sources, that sort of thing. Everything else, I think, would be someone providing a service, but it's up to the bank or the firm to do that. So yeah, hopefully that answers. But that's only my opinion, so don't quote the bank on that. So.
Bedru, many thanks.
Pleasure.
Ladies and gentlemen, Bedru. Now we have promised to bring to you the brilliant minds, and I hope we are delivering on this promise. The next speaker, Ole Sørensen from the ECB, will actually expand into the topic of bridging, connecting the different worlds. In this case, using two aspects of statistical data view and more supervisory data view, and how this can be combined in order to offer new insights. Ole, the floor is yours.
Yeah, is this working? Yeah. Thank you for giving me this opportunity to share the work we are doing. First, I will do a short introduction of myself. I work in the ECB. I work as a system developer, and I have done that for more than 15 years with the Sdmx systems. I used to work in the National Bank of Denmark, and I have also been working for the OECD and for the Central Bank of Ireland, also with Sdmx systems. So this is kind of my home field. XBRL is more a new area for me. This is a work we are doing, and this work is not finished yet. We are still in the process of doing this mapping. And this presentation only contains a very little of this work we are doing, just for the mapping we are doing between the data point model and the Sdmx. And this is important. This is the data point model from the EPA we are working on, and it's not XBRL in general. We would like to do that in the near future, but we have started with the data point model from the EPA because it's more concrete, and this is what most of the central banks are working with now, and they kind of need this kind of mapping and want them because they need it in their systems. I was here yesterday also, and I think, for instance, maybe every 5 or 10 minutes I heard the name blockchain. I can assure you I will not mention blockchain in my presentation. It's not a part of that. I also listened to John Turner yesterday, and he came with a report from the future. I think it was 2032 or something like that, and he didn't mention blockchain in that presentation, as I remember it. He talked about a new version of XBRL in the future, but the big talk of the town was that some of the organizations were still using the version 2.1. And I think this is also how I look at the future. I see changes, but not big changes. We start with a definition of microdata versus macrodata, and this is definition from the Interagency Group on Economics and Financial Statistics. So you can, of course, extend this kind of description, but this is how they define the aggregated data, disaggregated data, microdata, and granular data. And if we look at the definition of these, we also see the difference where Sdmx and XBRL are used. Sdmx is mostly used on aggregated data and some disaggregated data, and XBRL is mostly used on granular data and microdata and also disaggregated data. This doesn't mean that you cannot use Sdmx, for instance, on microdata. You can do that, but it goes beyond the definition of what Sdmx was supposed to be used for. But of course, you can implement dimensions and so on that will be able to handle microdata. And why do we want to bridge these two data exchange models? In the Sdmx community, we have a roadmap called 2020, and we have a lot of different goals in that roadmap. And one of them is the interoperability between the different standards. So this work we have started now, and that will continue until 2020. We have, as maybe some of you know, we have other work in the ECB. We have the SM cube. It's kind of a cube that binds the Sdmx and XBRL to each other, that you are able to define a collection, and then you can collect that data in XBRL or in Sdmx. But we don't have the mapping between these two standards directly. We get a lot of reports from different organizations, and a lot of these organizations, especially the central banks, are starting using XBRL for the last few years, and they, in their system, would like to be able to map and be easier for them to collect data in one of these formats and then map it to the other. And this work is done together with Banco de España for the data point model. I don't know, how many of you know Sdmx, have worked with Sdmx? Okay, a few, not many. So I will give a very short introduction to the Sdmx model. This is an overview of the organization. You have I don't know where the point is. Maybe you cannot. Ah, yes, okay. You have 7 organizations, that's the sponsors for the Sdmx. And you have a secretariat here that you have a representative from one of the organizations, from one of each. And then here you have a technical kind of working group for the Sdmx, and here you have the statistical working group. I am in the technical working group as a system developer, and I have been there since the group started in 2011. And my colleague, Stina Hofmeister, who is also a part of this presentation, but doing it next week at the global conference in Ethiopia, she's working in the statistical working group, who is working with mostly the content area of the Sdmx, standard code list, concepts, etc. And this is a extract from the sdmx.org website. And Sdmx stands for Statistical Data and Meta Exchange, and this is an international initiative that aims to standardize the mechanisms for collecting data and processing data, and it's sponsored from these 7 organizations that you see here. The Sdmx model, in more details, is basically dimensions, and dimensions is made of concepts and code lists. So you have here concepts and code lists. A concept is more like a label telling what this dimension contains, and the code list is like containing the values of that what that dimension can take. In XPL, that would be the same as a domain and members. And we also have reference metadata where we can add information about contacts, etc., for a specific domain. Attributes we use a lot in Sdmx. Attributes is telling something about the data point, decimals, unit multiplier, etc. That's something that is not a part of a dimension that defines the data point. In Sdmx, we have different formats. We have Sdmx is made for automated communication like push and pull, and the format we normally use is XML, which we call Sdmxml. We have also JSON, which we use for exchanging. Everything here is exchanged by web services, and JSON is also exchanged by web services. And this is used for kind of visualization of data on websites, etc. The XML is more used for dissemination of data between the organizations. CSV is also, I think the CSV is in the 2nd or 3rd public review, but is being finalized, if not the end of this year, then the beginning of next year, which is a way of also exchanging data in a very easy way, because Sdmx is cube-based with this dimension, so it's very easy to exchange data with CSV. JSMIS is the old format. Today it's called Sdmx EDI, and from John Turner, who mentioned that in the future they will still be using 2.1 of the XPL version, I think I can tell you that JSMIS is still being used, even though Sdmxml has been on the market since, I think, 2003. The data point model for XPL, its data point is in the same way as in Sdmx, an individual data requirement, and it's kind of measured by a metric, which characteristic is the nature of the measure to be performed. It's like a data type. It contains data type and a period of time, for instance, monetary and stock or flow or something like that. A set of dimensional characteristics, which is the same we have in Sdmx, and a time reference that helps to specify the instant of the internal time of the data point. The main differences between Sdmx and XBL, the data point model, is that in the entity identification in XBL, you have an entity identification as part of the data point model. In the Sdmx, we don't have that. We don't have an entity. When the central banks collect data, they collect data from different entities, but when they disseminate the data to the to ECB or OECD or any other organization, it's aggregated data, so you miss the information about the entity. In the Sdmx, we have frequency for each data point, normally as one of the first dimensions. It doesn't have to be like that, but we normally have a first dimension that's the frequency, quarterly, monthly, daily. You don't have that in XBL. And the use of dimensions is very different. Not very different, but different. In Sdmx, it's very strict. If we have a data structure, a definition of a domain, for instance, a balance of payment with 16 dimensions, we expect that all 16 dimensions are used in any case. We don't normally have dimensions that is not used. We have matrix versus measure dimensions. Matrix, as I mentioned before, is more telling something about a data type and a period of time. We don't have that in Sdmx, but we have something called measure dimensions, which normally we have one measure dimension, which is the primary dimension, but we can also have multiple measure dimensions, but we can only have one primary dimension. In XBL, or the data point model, you have a graphical presentation of the data. You have X, Y, Z axis, and in that way you can, as we normally see from the EBA, have different Excel sheets kind of visualizing how the schema would look like. In XBL, you have validation rules. We don't have that in Sdmx, but we are working on that. In the technical working group, we have something called VTL, which is a transformation language, which will be, it's not done for Sdmx entirely. It's done like a general kind of validation transformation language, but we will also implement that in Sdmx. So for now, we are working on schemas. That's the main problem. We need to have some schemas that implement this language, so we are able to exchange this data via our registries. In Sdmx, we use attributes a lot to define a data point. As I mentioned before, we use attributes to specify a data point, what the unit are, unit multipliers, a title, attributes, and we can do that on different levels. We can do it on a data point, we can do it on a data structure, or we can do it on a data flow. So we can do it on different levels, these attributes. I will jump to this first because I think I have two slides here that comes in the wrong way. Our case study is, we have considered if we should do this mapping in both directions. We could probably do so, but there will be some issues in relation to the attributes from the Sdmx. So for now, we are just modeling this from the deep data point model to Sdmx. And we have taken the EBA C0502. It's one table that we have taken from the data point, and then this table belongs to a table group with more tables, and I will show you now that what considerations you have to do when you do such a thing. One table is like a sheet in a spreadsheet. So if we take one sheet or one table, the process for that is that we have almost all dimensions used. There are some cases where we don't have, I'll come back to that later, but there are some situations where some of the dimensions is not used. The problem with that is that we will have a lot of data structure definitions, domains. So, for instance, if you take one table within the core data point, or the core taxonomization, we will have, I think, more than 100 data structure definitions. So, I mean, but that's a consideration you have to do. You can also take table groups. This table CO502 belongs to a table group. And if you take them all, then you would probably have fewer data structure definitions, but you will have many more dimensions that you need to disable. I'll come back to disable, or what I mean by that. And you can also take the whole core into one data structure definition, but then you have, I don't know how many, but really many dimensions that you need to disable. But there's actually some organization that likes to have one data structure definition for all their collections, even though some of the big ones, IMF for instance, and then they would like to create data flows, a subset of data for each of them, and then disable dimensions. In the case study we have done, you can see here a table how we have tried to map the data point model for this specific table. First of all, in the first row we have the frequency for Sdmx here, and you don't have the frequency as I mentioned earlier in the XPL model, so we don't have anything here for the XPL, but here we will create, we need to have a frequency for our, when we collect data in Sdmx. You have the dimension here for XPL, and that's the same as in Sdmx, a dimension here. In the XPL, we have a metric which contains two information actually, and as I mentioned before, it's contained a data type and a period of time, and we have now model that into one dimension. But the arithmetic here is that 1 plus 1 is not 2. 1 plus 1 is 6 or something like that, because you could actually model this metric into 2 dimensions if you want to, or maybe 1 dimension and 1 attribute. So there's no golden rule of how to do this. This is just how we did it, because it's simpler. You have a domain in the XPL, and we have the same as the code list, and you have the member for that domain, and we have code values. And attributes in Sdmx really does not exist in XPL. We can create some decimals and so on, but you don't have the attributes in the same way as we have in Sdmx. The good thing about this data point model from EBA is that we can visualize the table I was talking about before. This is the CO502 table. It's one sheet in an Excel sheet. And you can see here, this is the dimensions we have up here, which goes directly as a dimension in Sdmx. You have the codes here that define the values for one of these data points here. And you have here, you have dimension. This is the metric, and this is another base that dimension from XPL that we also model into a dimension. And what you can see here is that the places where there's a red cross, this is where we have an issue in relation to Sdmx, because for these data points, for this data point here, you don't have a value for this dimension. And in Sdmx, we like to have a value for each dimension. So we have to do something about this, and here also. So this is the issues we have, and down here. So if we model this table into our Sdmx, you'll see here that the frequency is not available in the XPL, but the concept MCI we model into MCI, and for the others we model directly into. And here you have the metric. We simply model that into one dimension. We call it metric, And then we had the last one. I think I go back here. We had this last one down here where you don't have anything at all for all these dimensions, for all these values. So in this case, we simply just create as a dimension also. But this is just how we have done it. And in the document we are writing, we don't say that this is 1 + 1 is 2. We just give this as an example. And we also tell that there's other ways of doing it and try to explain how you can also do it and how the pros and cons are. But we are not finished with that document. This is just a study case in the first. So if you take the example of a value here and take the dimensions here and the values, and you take down here the metric, and here you have the base that is missing here. So if you should create a data point in Sdmx for this specific one, we will do it like this, and we will create a data point like this. And now I have M here. I think that for the I think this should have been a Q, because I think this table or this corep is reported every quarter or something like that. So our frequency here would be a Q, and then we have actually here we have created the values of these dimensions. And what is important here is to see that here in the last one, if you go back again here, for this BAS we didn't have a value, so we need to tackle that in some way. And right now, like we do, and we have some global data structure definitions, like balance of payments, there are situations where we need to give this value, what data point here, minus Z, which simply just means that this is not applicable. And this is the only way we can tackle this situation, but this is already done in our global data structure definitions. There are, as I said earlier, in the community of Sdmx, organizations that would like to disable dimensions, and this would be another solution how to solve this problem. If you would probably maybe create a data structure definition for a table group, and then you will create data flows for each of these tables, and then you would be able to disable dimensions. But this is something that we have a draft of the Sdmx version 3.0 from one of the lot of these discussions we have had in the technical working group and in the statistical working group. And this is something that could be a part of this. We will have to wait and see how this ends up. So, I mean, the summary is there's not a direct mapping between Sdmx and the data point model. You need to really to cut a toe or do different decisions, consideration, how to make the different implementation. And one implementation from one company can be taking the same table or table group or corep can be very different from another organization depending on their system they have. So it doesn't have to be one-to-one. As I said earlier, we have not finished this work yet. It will end up being a document describing this, and up to 2020 we will work more directly towards mapping the XBL in general and not only the data point model. But the data point model was a good start because this is something very concrete, and this is something a lot of the central banks are using and reporting today, and this is something that would be very helpful for them. I think that's all I had to say about this.
Ole, thank you very much, because it actually touches on one of these points which concern in general the understanding of data. How do we describe the data? How do we understand it? And furthermore, how can we analyze the data? So as you can see, from the perspective of statistics, where Sdmx is heavily used for time series analysis, and from the perspective of supervision, where the DPM methodology is particularly used for grouping, describing the data sets such as corep, finrep, etc., there is a possibility to actually put a bridge between these and therefore make a bit more efficient analysis going forward. Can I ask you one question? a lot of that is modeling and abstract modeling and theoretical modeling. When do you think this kind of bridging can be practically applied for analytical supervision, for statistical macro analysis and micro analysis in the actual central banks around the world?
Tomorrow? I mean, it's not.
Really?
Yeah. I mean, it's not rocket science or anything. It's simply just sitting down and decide how you want to map it. I mean, this mapping here you could implement tomorrow if you wanted to. In the ECB we have something called SMQ, which is mapping Sdmx and XBL into one cube. It's not directly mapping between these two standards, but it's mapping these two into a cube that is defined from knowing what XBL is and knowing what Sdmx is, and then creating a model that's kind of taking the best from both models, but not a direct mapping. And we're using that today to create the Sdmx and XBL. So I mean, it's not. It's just sit down and do it. I know. I mean, I've been a system developer for many years and worked with Sdmx systems for 15 years, and I know that you get something on paper. Paper is really easy to write something on when you are in the machinery and you try to implement it. Yeah, that's where you get the problems that maybe was not on the paper, and you see the real problems. But I mean, I don't see any big kind of problems trying to implement that. No, it's not that difficult.
Thank you, Ole. Any questions, Daniel?
The second statement, different decisions, considerations have to be made in different implementations. As of today, within your organization is participating in the BERT project with some banks, and they are addressing the same kind, some part of the objectives of that group is mapping TPM FinRep to somewhere. Do these teams take the same decisions and considerations, or are they in parallel and perhaps are taking different ones?
No, they're parallel. I mean, it's some of the same persons are involved in this also, so it's a parallel kind of.
It's parallel and converging, or parallel and just not? Because parallel can mean different things. Will you reach to a consensus on how to do it?
Yeah, we will reach a consensus on how to do it. Yes. Yeah.
Any?
Thank you very much. Is the dictionary used in Sdmx available for the public in order that everybody, everywhere, academy or investors or whatever, are able to obtain the meaning of the information published on Sdmx? Yeah, you are commenting how to define the time series in Sdmx and how to characterize each component. Is this information available for the public?
Not at the moment, no. This is the document we're doing, and it's not supposed to be there. It's a document. This is the document that the players will have first, at least the central banks would like to. At least the central banks would like to have this document, but it's not a confidential document or anything. So it will be available when we have done the job, when we have done the work.
The question is that in XBRL, the next summit is in Paris, and Sdmx is next week in Addis Ababa, Ethiopia. Probably this reflects the different approach how XBRL and Sdmx is governed. That in turn have impact in the companies, in the public, and whatever. I think, I don't know how to solve this situation because they feel, personally, I feel that there are two parallel universes. One universe in XBRL that is working with a model of fundraising, a model of governance, a model of transparency, and Sdmx that is absolutely different. And how to link both? Maybe that the problem of direct mapping is how to direct map organizations in which one is meeting in Paris, open for everybody, and the other is meeting in Addis Ababa, Ethiopia, basically for civil servants. How to organize a mapping between these two universes? Thank you.
Well, if you permit, I'll add to this question because as I serve on the board of directors of XBRL International, I think that part of Ignacio's question is going, I think your presentation focuses on the technological mapping and so on, and more of the Ignacio's question, as I understand it, goes towards the governance and bridging the two groups of experts working on Sdmx and on XBRL, and at the same time making Sdmx developments more open and public to the more open to the public. So I see it as two different, so to say, layers. Technologically, we are converging already. There's the SM-Cube developments. There is this development. Before there was the Jagger database, and so on. So I see that there are a lot of initiatives going towards bridging the standards. Perhaps you would like to comment on this governance aspect and whether you see this possible to bring the groups together maybe and consider some common forums for discussing the time series models and the DPM models jointly?
This is the Chatham rules, right? Yeah. Okay. No, but I'm not really involved on the governance aspect of this, but and I don't know if it's different people sitting in the different areas, and not to be too pessimistic, but I am afraid that it's not that easy just to get this because I think that let me say it another way. The reason why this is done now is because I don't think this would have been necessary if for instance, we have now the single supervision mechanism, the SSM within the central banks reporting to ECB and reporting to EBA in that direction, and this started this whole kind of thing of mapping these two standards. So in that perspective, I think that it's needed, but I'm not sure that it's something that's going to happen in the near future. But maybe I'm too pessimistic, I don't know.
Thank you very much. Ladies and gentlemen, let's put our hands together for Ole. And if you permit, we've changed the agenda, as you know. We adapted in an agile way to the fact that, first of all, I made a mistake, and you don't start a conference in Spain at 8:30 in the morning, which we moved a little bit. And second of all, I need to also announce that, unfortunately, one of our keynote speakers, Werner Bieke, sent his apologies this morning as he's having a severe fever and could not have attended. I will try to make it up for you, and we'll try to maybe send a presentation of his or a summary of his afterwards to the participants. As of now, I would like to change a little bit, and first of all ask you to bring up your phones. Take it out of your pockets. Radek, can I ask for your help? Can you go to Chrome and put the...
Is there coffee in our phones?
No.
How about Java?
Yeah. We will see. Give me a second. Zaloguj się proszę na mój adres mail. Hasło, kiedy muszę się wybrać. Nie, powinienem być gdzieś log into. Aha. In the meantime, I would like to kindly ask the participants of the RegTech panel, Mark Sell, Alex Proikschet, and Simon Olsen, to join me on the stage.
Spanish keyboard. Sorry everyone, but I don't know how to use Spanish keyboard.
Please, just join. Okay, do you have your phones in your hands? Are you connected to the internet? No? Sorry.
Take a seat.
Launched. As a warm-up, please follow the instructions. As a hint, 2015 September, the Bitcoin price approximately 200 euro. 217 September, the Bitcoin price approximately 3,500 euro. When will I be able to buy my favorite Aventador for 4 Bitcoins, in your opinion? Got a few options. Use your phone to vote. Come on. Oh. You're really being nasty.
He needs paper and a pen.
Oh. Seriously? It's only the second child that I'm awaiting, so still not yet a van. And you can put a small child seat in the back of the Lambo, you know that, right? So. That's looking better, at least 2 people. Thank you. Thank you. Go on. Come on. Come on. All right. We will use that throughout the panel. What do we have? Third speaker. Is Mark here? Mark? No? I think he'll join us. All right. He's coming in. Gentlemen, let me just introduce to the panel. I will try to be a bit nasty as well, right? If you permit. We talked about trust. We chatted about this disruption of trust. And one of the questions that I would have first for you is, before we start, to share a few words about yourself and about your experiences in building this trust. You all come from cryptocurrency, Bitcoins, blockchains worlds. If you could, in a very, very short way, introduce your experiences, how are you contributing your organizations to building this trust? Would you like to start?
Yeah, I start? Okay. All right, so my name, I just introduced myself, right? And I explain where I'm coming from. So my name is Alex Proikschet, and I studied here at the TODE, like almost 20 years ago. And I'm German-Spanish, and I believe that blockchain technology really offers a big competitive advantage for the European continent, and it's an opportunity that everyone should be taking up, I think, in the European space, and I think the European regulators have been doing a really good job in not intervening too much into this new technology, because it's very, very new and very, very unknown for the time being. And I think we should also follow the lead of the Japanese, because the Japanese have been really open-minded, and I think they have recognized that this is a big opportunity for Japan as an economy, and it's also a geopolitical tool in a sense because it has the potential to really change society in a big way. So what we've done in Spain for the time being, in that sense, is we published a book like 4 months ago that has become one of the top 10 bestsellers in Amazon Spain. And I think it's now in the 4th edition with 5,000 copies that have been distributed. And it has become really famous in the Spanish-speaking world in Spain and the whole of South America. And we're publishing it in other countries also at the same time. And at the same time, we're also building a Spanish blockchain community, which is called Blockchain España, which is where basically we're trying to create some of the key elements that are needed to kick off a blockchain community, which is traditional things like training, experiment with the technology, and collaborate on white papers, and try to create a basic community where you can really kick this off. And this is what I've been involved with for the time being in the blockchain space, but there are also many other initiatives in Spain and the Spanish-speaking world.
My name is Simon Olsen. I'm coming from Switzerland. I'm working for a company called Leica Corp, which is building a global exchange based on the blockchain. And in preparation for this panel and thinking about RegTech, I kind of took this as an opportunity to step back and try to reflect and to think, one, about the overall development, the imminent development which we see today, and one about the origin of the term and the origin of the thinking. And in my view, the fintech idea itself has big contradictions. And it's an idea which is very prevalent, but it's not an idea which has gone around the world and changed it. The imminent change from the blockchain, I believe, is far larger and the impact is far larger and far more dramatic for the financial system, for the economy, than anyone imagines today. It's probably larger than the internet. It might be like the Industrial Revolution. It's an exponential development that will have far, far-reaching implications. The doctrine RegTech to me comes from fintech, and fintech by nature assumes that finance is technological. If we say that finance is technological, we refer to a particular theory of money, which refers to that money has come from the exchange, is primarily a change, comes from the barter exchange, and you use it as an exchange. So you have commodity, money, commodity. And money has some value because it facilitates exchange. And if you assume this theory, then obviously money is primarily a function of a series of prices, and is by nature technical. Then we talk about high-frequency finance, high-frequency data, and so on. And it's very interesting, Nick Szabo, he wrote in his essay about the origin of money, he uses this interpretation. Obviously, this interpretation from a historical point of view is wrong. The real equation is money plus commodity equals more money, and the key driving force was credit and not the barter exchange. And I think if you assume that credit is the driving force, then trust is fundamental. And finance by nature is always political. So this doctrine of fintech, which has risen after 2008, part of it is peer-to-peer, trustless system, kind of replacing machines, humans by machines, algorithms. This is an illusion. This is an illusion and it's doomed to fail. It's a completely contradictory ideology which has come up after 2008, where you had this long kind of project which started in 1989, has failed. And we are in a moment of political decay, and finance without trust cannot work. Finance without the state cannot work.
Thank you. Mark?
Good morning. Buenos dias. My name is Mark Sell. I spent the last 30 years working as a security consultant for PricewaterhouseCoopers. My background is cryptography and biometric recognition and these type of things. Mikkel, thank you for asking me what I understood to be two questions essentially. Briefly say something about yourself. I think I did that. And then the second thing is, what could you contribute to discussion of trust? I love you for asking this question because it allows me to point out that I think it's the wrong question. I don't like trust. Have you ever come into this situation, you know, at a dark alley somewhere and somebody says, trust me? Well, usually that's the point in time that I'm wary and I say, wait a moment, is trust really something that I want? I don't like trust. I prefer trustworthiness. I'm also involved in a Horizon 2020 project about building trustworthy solutions. And I think we should make this distinction regardless whether we are talking about blockchains or RegTech or Bitcoins. I mean, trust is something subjective, which is, you could say, calibrated on context and on your understanding. And it's what you maybe base a subjective decision on. But what we actually are looking for when we try to build an ecosystem, it's a trustworthy ecosystem rather than a trusted ecosystem. The trust should be low. There is no reason, there should be a little reason to trust. There should be a high indication of trustworthiness. And it's with that philosophy, you could say, I guess one of the main reasons that brought me here is the gentleman who did one of the keynotes yesterday, Peter van den Hul of DG FISMA. He invited us to deliver a blockchain-based demonstrator for RegTech reporting. I'll be saying something more about that in the rapid fire. So that's where we try to build a trustworthy reporting system on the basis of blockchain and using the large plethora of existing regulatory reports. I guess I've exhausted my time by now, but
Mark, this is actually very good. I would like to build on your last comment, trust versus trustworthiness. We briefly touched on that with Bedru Shah during the previous presentation. I'll ask you to really contribute to that, the subsequent question, which is basically, we are having extremely advanced mechanism proposed to build this, and I agree, trustworthiness. These mechanisms are far beyond comprehension of common user. I was referring to elliptical curves for zero-knowledge proof protocols. Try to explain it to your grandmother, right? And it's kind of challenging. It's kind of challenging. We are trying to, at the same time, build this trustworthiness and explain the grounds for this trustworthiness. This is data, algorithms, protocols, versus diversified cryptographic functions, and so forth. Don't you see this a little bit of a big challenge that we are facing in building this trustworthiness in, for instance, the blockchain applications? And I compare it very often to things such as people's lack of trust in vaccines. There is enough data to prove that vaccines are good for the society. However, people's perception of that and perception of this data is different. So how do we try to overcome this issue? How do we try to build or convince users build this trustworthiness? We can start from this side and go this way, but freely contribute, please.
Yeah. Okay. Well, I think if you look at trust and trustworthiness, there is a distinction. Usually it's in a setting of I have to make a decision. Shall I go for that vaccine or not, for example? Shall I board that plane or not? So that's a human decision. And there is also the context that a machine has to make a decision, because we are more and more seeing self-driving cars and so on. So let me first point out, let's limit ourselves for the time being to the human decision. And in that context, I think for a long time, trust has been studied by people like Deutsch and Gambetta, who explained that trust is something that helps you actually adjust to the complexity of society. Because, you know, I don't know very much about vaccines, but I know you for a while, and I see you give this vaccine to your children. I know my knowledge is limited, so I have to combine my own knowledge with the knowledge of some other people, and then I will take that decision. So in an ecosystem, that's why you see, for example, all of these recommender systems appear on the internet, because, well, in the end, it's capturing the decision. Somebody else also bought that book, booked that room, or whatever. And on the basis of the information you have and the trustworthiness signals you get from the renter of booking.com or whatever, combined with what you can accept to be your own limitations, and you enrich it what you get from other people, then you can, in the end, make a kind of evidence-based, reasonable decision. That's also the approach we take in this Horizon 2020 project, that it should be evidence-based as much as possible, and semantics is a big part of it, because you take the word trust, you Google the meaning of trust, and you will find, I don't know how many thousands or 10,000s of hits, but it's a very interesting and broad topic. So I think essentially you can look at trust and trustworthiness in the narrow way. Is this cryptographic algorithm, is this hardware trustworthy or not? But that's definitely not enough if you operate in the real world. There you have to look at it from the cultural or the sociological, economical components as well. That's what makes it interesting, but hard. So if you look at the blockchain, for example, when you look at the crypto in the blockchain, that's fairly well understood cryptography. I mean, there's really not much, there are no new algorithms. It's an interesting way of putting it together. So the fact that there is no centralized decision point anymore, then I hear people say, "Oh, this is a trustless model." Well, forget it. You trust every node that the code is not being tampered with, and you trust that there is no backdoor, so all the nodes are actually changed by some kind of virus, because if the majority of the nodes are changed, your trustless infrastructure is hijacked. So I don't buy that this is like trustless or whatever. It's just another model. It's a consensus model. But maybe I should stop here and pass the word on.
You know, to me it's always difficult to figure out what is actually going on. And, you know, the American foreign minister asked the Chinese foreign minister, Zhou Enlai, what have been the consequences of the French Revolution? And he said it's too early to tell. But, you know, nevertheless, I would like to try to tell you how I see it and what there has been. So, look, a Bitcoin, the advantage of this Bitcoin thing is that you can send a Bitcoin from one person to one another, and the other person receives it immediately. Okay? And this is a complete ingenious invention. This is an invention of historic dimension. If you go back to what finance is, and has a revolutionary impact on the transaction costs, revolutionary, like the Industrial Revolution, and transaction costs are fundamental to the economy. If we go back to what is finance all about, Rothschild said, you know, the job of a banker is to bring money from point A where it is to point B where it is needed. And so it's rather clear that, you know, if you can send a Bitcoin from point A where it is to point B, eventually you can take a dust of Bitcoin, And you can attach to it a contract, an IOU, a bond, an equity, and move it from point A where it is to point B where it's needed. The ledger, the blockchain ledger, creates trust because you write down that it's a global ledger and it's a global notary system. So this is a major step, okay, that you can write down who belongs to whom. It's like the notary system. So it's absolutely fundamental. The problem obviously is that if you have a real asset which you attach to a Bitcoin, you still need to keep this asset somewhere. This asset needs to be somewhere. There needs to be some legal contract attached to a colored coin or to a token, which gives you a legal right to sue for the underlying, and the underlying needs to be kept somewhere so that you will get it if you sue for it. So this is fundamental. Otherwise, it doesn't work. You know, the Bitcoin as itself, if you just move the Bitcoin or the Bitcoin dust, you know, it doesn't work. You still need to have this point of trust. Now, in reality, what I see is that the implications of this are completely different. What you see already is that the way people are investing is changing, completely changing. They invest widely, and companies have thousands of investors instead of hundreds. You cut out. You have price discovery. You can diversify with small amounts. This has lowered market entry costs for companies, and it poses a lot of new questions. How do you do the accounting of a company? Do you do it in your own equity? You can pay your employees in your own equity. You can. The company I work for, we created a colored coin as a use case, which is a forward on the run according to Swiss law. For a perpetual forward for a Swiss equity. It's a security of the Swiss law. It's approved by the FINMA. And we launched it as a use case. We now have 4,000 individual investors who bought our coin. We pay some of our employees in coins. I get paid in coins. And you wonder, how do you do the accounting? Should you do it in Swiss francs? Or should you do it in Leica coins, which is a forward on the run to our equity? Probably. So if you can pay with your own equity, the more you can pay with your own equity, it's actually credit. You know, credit is fundamental to building a business. Credit is the driving force of everything. If there is more credit, the economy will grow more. So I believe that the impact of the blockchain will be far, far quicker and far more dramatic than anyone can ever imagine.
So thank you. I'll actually bring it up to the next time I meet the International Accounting Standards Board. I'll bring it up whether we can account like a coin. Alex.
Yeah. I think there's a lot of confusion in the market and about what a cryptocurrency is. I think Satoshi Nakamoto, when he did build Bitcoin, he did create it as an alternative to fiat money. I mean, with fiat money, I mean euros and the dollar, etc. And he basically wanted to create a money without central banks and commercial banks that allowed people to interact between themselves. And that's something that might be very questionable if some governments or central banks want that. But I think what is really interesting about this is that was the first wave. And what we've seen after that is the second wave, like with Ethereum, which is a smart contract blockchain platform, and the other waves of blockchains where they're trying to do other things. And I think it's really dangerous to mix all these concepts, because something that has been created to act as a digital money or as a digital peer-to-peer money does not to be applied to everything else. And what is happening in the market right now is people are calling everything crypto something, which is not really crypto something. In reality, you have a token economy. And as part of this token economy, there are all kind of different aspects to it, and it's really dangerous to put it all into the same pot, from my point of view. And Satoshi Nakamoto, what he wanted to do, and what other people are also trying to do, and I think that's the genius that Satoshi Nakamoto started with, is create a trustless system where you basically could interact with anyone in the rest of the world without having to rely on a centralized party. And that's a really great thing, because as history has proven, centralized parties for some critical transactions can be really, sometimes cannot be trusted. So you can trust a network instead of having to trust a single party. And there's another aspect to this, which I think, following up on what you just said, is I think even without Bitcoin, I think the nature of money will change dramatically over the next 30, 40, 50 years. And money as we know it today is a very new invention in reality. And if we take the whole history of humankind. And what I see in the future, it's something that's called, that's labeled very often as tokenomics or cryptonomics, is that in reality, in the future, as we combine big data, artificial intelligence, blockchain technologies, and other technologies that maybe we don't know about yet, we might create a situation where we have a situation of hyperliquidity, where you can convert any asset into something very similar that is very similar to money. And then the question will be, do I really need money to do an exchange? And the question might be in the future that you don't need that, because you might have a share of a Telefonica, and that Telefonica might be liquid in the market directly because there's a market price that you can directly exchange, because the settlement systems, the payment systems will allow that to create that kind of economy. And that's a big question, because as money is a political tool also, and how do we organize society? So, and that's what makes blockchain so important to understand, and also makes it really important to regulate it in an aggressive way, because you can kill the invention if you do that. And that's why I think we should follow the Japanese path, because I think Japan and Singapore are really showing the way, or the City of London, because they're understanding, okay, if I want to maintain my competitive advantage in the global financial market as I've done in the last 200 years, I need to be on the cutting edge of the future of technology and finance. And they're creating a very favorable environment. And we in Europe, we're losing out because we haven't done anything yet to create a favorable environment in this kind of technology, where the Japanese, the Singapore, and the British, they've done that. So I think the combination of all those kind of things is really like about something that is, from my point of view, critical nature for the European continent.
Thank you. If I might, I'll be this nasty, mean person here to ask you more difficult questions, because we've heard from Badger before, and around a month ago, I met with MAS in Singapore, and they were sharing some concerns, some challenges related to blockchain. They were talking about blockchain not actually being matched with the use cases, with the user requirements, but rather than that tested in all these different possible fields and the hype for the blockchain and so forth. Can I ask you to very quickly pinpoint 3 key challenges that you see related to the blockchain going forward? If we look a little bit towards the future, what do you think are the biggest, so to say, challenges? Let's start with Alex here.
I think the expectations are too high from what blockchain can do in the short term, and I think the technology will not be able to deliver on the short term, even though the long-term impact might be very high. And I think that will create a mismatch between expectations and the capacity of delivering. And all blockchain technologies, it doesn't matter if it's public blockchains or private blockchains, they're very immature for the time being, which is not a bad thing. It's just such a new thing that we all need to learn about how to use it. And I think what was also very difficult is that if you apply traditional mental models to something that is completely new, it doesn't really make sense. I mean, it's like a friend of mine, he tends to say, I mean, it wasn't the candle industry that created the light bulbs, just because they didn't like improve over time candles and they say, oh, now I do the light bulb. No, it was a complete disruption of the candle industry, and then they created the light bulb. And you have plenty of other examples. And I think in this situation, we're in the same situation. We cannot just use the same traditional mental models, which is something I'm seeing all the time. And we just need to come in say and think, I know nothing. Let me understand how this works. And let me see what I can do with it. And instead of trying to think about what applications can I do, is try to understand the technology. And just by the understanding from the technology, you will have ideas about what kind of applications will come up. And that's something that I'm not seeing too much today.
Simon.
Okay, look, I think there's two tales here about regulation. I mean, if you look at what is happening currently with ICOs being launched, I think it's like thousands. It's like 10 every day, or And I get many emails every day about ICOs. They all look the same. They all are the same, more or less. It's some kind of creative idea where you try to sell people things which are worth nothing for something. And you see, in an investment, you give cash now to receive cash flows in the future. So if somebody sells you something where you're not going to get anything, that cannot be right. The regulator will close this. And this will close, and clearly the people who do it in bad faith. They do it in bad faith. Why do I say this? They're separating structures from their existing structure. They create a foundation, another company, because they want to break the legal connects. So to me, it's clear that this whole ICO bubble, it's like a tulip bubble, where people the token bubble or the code bubble, where people have no rights to nothing. They have no rights to nothing, and this will end on one day, and it will be over. And I think the regulator has given very good guidance in the DAO ruling. I encourage everyone to read the DAO ruling. It's an excellent reading on the blockchain. I think it explains a lot. It explains a lot how securities laws will be interpreted on the blockchain. I mean, if you read the People's Bank of China statement, you have the impression that a lot of these things were sold in China, where a lot of white papers are written in Chinese. I mean, to me, it's I'm very clear on that. However, I think the regulators, is what you said, the regulators should not block the development of the blockchain. They cannot. If they do that, they will make that the financial center will move elsewhere. They will create a new Luxembourg. So far you cannot see that regulators are taking these positions. I don't have the impression that Switzerland the FINMA is very open, Liechtenstein is very open. I have the impression that regulators are open to a blockchain solution. We described the entire system of our company to the FINMA in great detail. We have a dialogue with the FINMA. We explained them how we settle on-chain, how we settle off-chain, how the colored coin works, how the contract works. So we're very, and we believe that the regulator is taking a good position. You know, these sandboxes or fintech initiatives, to me, look, they are pilot projects. They're a little bit like they're like projects to be bought by Banco Santander or something, which you do as an experiment in a lab, and then you can to see how it goes. I think that, you know, the development here is so fast that, you know, we're growing, at the moment we're growing clients tenfold in the last 10 months. And we're not even regulated yet. I mean, to me, I see that we are at the beginning of an exponential curve. You know, your bank account, your custodian is going to be your wallet. This is the future. And this is not the future in 10 years. This is the imminent future. You know, and so the question, this has far-reaching questions for banks, for example, because currently a bank is in a very strong position because it's a centralized counterparty. You know, very few, even Swiss pension funds have a centralized custodian and a centralized counterparty. And that's why, for example, there's not a single fee at UBS which is the same. There's no one pays the same fee as one another. They're all confidential. They're all so good that you're not allowed to tell it to anyone else. It's always according to the relationship. So the business of a UBS is so good because you're the centralized counterparty. You do the lending, you do the custody. If this disappears and you have it on the blockchain, so everyone will have a professional cash management, for example. But this is just, you know, one angle. But look, there is no point. Karl Marx said the tragedy of history. There's no point to try not to go it. In my view, the development is so dramatic that there is no point in trying to resist it.
Mark. what would be your view on the challenges, the key challenges for blockchain going forward?
I think these are, in the first place, scalability. We do many blockchains now, but the world's a big place. And when you see some of the larger crypto, let's say, crypto functionalities used in the world, the ICAO-based passport system, the International Civil Aviation Authority organization. We have a worldwide system where you can travel, show your passport, and essentially part of why your passport can be validated is based on traditional public-private key cryptography that's been built, it's established worldwide, and there are quite a few billion people in this universe. Blockchains are, in that respect, I think, still usually smaller, and we have to see how well they will scale. That's the first one. The second one, I think, is performance. When you look at, I hear very often now the term Bitcoin here, the last minute, so to speak. Bitcoin's about payments. If you simply compare the throughput of the Visa network versus the throughput of the Bitcoin network, I know there is a new derivative, the Bitcoin Cash, and they are working on it, but they are nowhere near the performance that the existing payment networks already have. Not to mention the energy cost. There is a very funny article by some, I think it's an Irish researcher who calculated roughly how much energy is devoted to blockchain, and I think it's like in 1 day of blockchain consumption corresponds to the electricity consumption of the country of Ireland or something. So you could say this is disproportionate. That will probably not continue. And then the third problem is the cash out problem. I mean, it's fine. We can both share some colored coin, but there's only so much we can do with that colored coin within the colored coin community. At a certain point in time, you want to convert it into some other form of asset. Because there are big distinctions. I mean, you have blockchain solutions where the asset resides on chain, and Bitcoin, the asset, the coin resides on the chain. There are a whole lot of other series where the asset really is represented by something on the chain, but the real asset lives off-chain. The real asset is a diamond, and what you are trading is the right on the diamond or the authenticity of the diamond. So the balance between to what extent is the system trustworthy when we go off-chain, I think that's also something that we will have to learn over time. And I like the example that was given by you about, let's think about how will payments be done in the future with colored coins or whatever. One of the joys of working in security for a while is that you come across many solutions. And for many, many years in Africa, there is a payment system which is called M-Pesa, mobile Pesa. Pesa is the Swahili word for something that weighs something. It's money. And M-Pesa was essentially an SMS-based payment system. Very, very low cost. So you could go in rural Africa, small village, you can buy whatever you liked. For white folks like me, that's usually gasoline and food and things like that. And you can pay with just sending an SMS. At the cashier of the supermarket, there is a sign of the account, the M-Pesa account that you have to pay to, and it takes like 3 or 4 seconds. You send an SMS, and then it's interesting because originally they launched the value was the same as the national money. But very quickly, apparently, people found a way. The preferred way to pay with M-Pesa is by paying in airtime, because airtime is something that they all need to make calls, and it was cheaper, the cost of transaction to passing on airtime from me to you is cheaper than paying some rands or whatever money is local in that country. So the creativity of people of finding ways to pay, I mean, airtime in that sense was in M-Pesa a long time predecessor for the Bitcoin, but it's embraced at large scale in Latin America and in some African countries. So the creativity of people is one of the best sides, I think. Did I answer your question?
I think yes. To at least the first part was really referring to the challenges. If you want to take a look back on the screen, you will see what the audience found out to be some of the challenges, and I apologize because some of these are pre-described, so to say. They will not match the ones that you mentioned. But if you want to offer any comments on the data, by the way, if anyone from the audience wants to still vote, it is open. So as you can see, thank you, Radek. So as you can see, there is still a bit related to other, which I would say that probably some of them at least refer to the challenges that you did mention. There is a large chunk related to trust, aka trustworthiness, which we could probably, for the sake of simplicity, treat together here. There is a bit on the business problem, the mismatch on the business problem. I would say that maybe one or two people of the voting people highlighted that. Proliferation of the consensus mechanisms, similar. Need of collaboration and lack of data standardization was treated as a very, so to say, not really particularly relevant challenge in the context of ecosystems. Any very short comments on this data that you can see from the audience?
Could I mismatch with business problems? Well, you know, I'm quite often speaking with people from industrial businesses or insurance companies or reinsurance companies, and usually they have a blockchain expert and their team there, a senior management team, and they're trying to figure out how blockchain can help their business. So usually you really have to look at this in great detail. I mean, to give you an example where the blockchain can come in, just one example. Okay, very large industrial corporation, I cannot say the names, but one of the large one has a large receivables story, large financial unit where they fund all sorts of industrial projects. So if they can trade these receivables, if they can sell them on to someone else, this is a huge advantage for them. I mean, the advantage for them is enormous. Or, I'll give you another example. You mentioned very interesting examples from the air industries. There's a lot of problems between airlines because one person books a ticket with this airline and then with another, and the whole kind of settlement of transactions between the different airlines is very complicated. This is governed by IATA. So IATA calculated the savings, which they would have, are tremendous if they would have a kind of way of mechanism of settlement on the blockchain. So I believe that the impact on the business is huge. For example, the United Nations has made an RFI to bring humanitarian assistance onto the blockchain, like just to request information, and so on. So I believe that there is a huge opportunity there, and I believe that I don't really see the mismatch. I see a perfect match. I believe it's just people are trying to figure out step by step, and they realize just where it helps them.
Thank you, Simon. I think that we are running a little bit of out of time, and the next panel is on. Let me ask you for one final question and very short yet very important response. Your vision, 10 years from now, 20 years from now, the key point that you want to pass to the audience. And to make it a bit more challenging, we're going to ask the audience to be your investors panel and judge your responses. Pick the ones that they will like the most, they will agree most with. So think about what in terms of the RegTech, and particularly we focus on the blockchain, what in 10 years, 20 years will happen? How would you like to convince the audience to vote for your opinion? Mark?
Could I reflect a little bit more? I'm not sure I understand the question entirely.
So we focused the TODE conference around 10 plus 20 years horizon for the RegTech. What do you think will happen within the blockchain application of that, the application of the technologies, the RegTech, within this 10 plus, 20 plus year horizon? John Turner gave a bit of a vision yesterday about that, with a time warp that he imagines going to 2032 and looking back at what happened in the past years. What would be your comment, so to say?
Well, then I think blockchain and DLTs are here to stay. By the way, the Estonians, who are a reasonably advanced country, they've been running hash tree based timestamping services like for 10 years or so. And they're among the top timestamping providers functionality in the world. And I think that's what you're going to be seeing here in the RegTech. In a number of use cases where there is a need to have multiple writers who have to declare something, commit to something, and there might be a kind of mutual distrust or competitive position between them, which merits that there is no real central authority. In these use cases, I think blockchain is here to stay. And as younger people learn more about cryptography, because I'm quite impressed by the response from the audience. The trust in the advanced crypto. I mean, for me, there is no advanced crypto in Bitcoin or blockchain. It's old school crypto. The really advanced crypto, that's the crypto that we briefly discussed. That's the post-quantum crypto. That's the 5G crypto. That's advanced crypto. But that's just society which has to come to terms with the state of the art. And I'm familiar in that field, and I absolutely have zero knowledge in medical technology. I mean, and in medical technology, I'm a nitwit. So the only way to deal with this is by working together, I guess. So the short summary is, I think it's there to stay, and there will be a number of use cases where it's going to be highly relevant. If you have multiple writers, consensus, and some kind of competitive position, mutual distrust. You don't want to disclose everything, but you need to have a firm commitment to something, and there it will thrive for the next 10 years.
Thank you. Simon? Very briefly, because we are eating from another panel.
There's been a report about the state of the financial system for the French president very recently by a senator. And the report said that a financial crisis was not on the horizon. But the big risk was a political crisis. It was the repressive, the kind of rise of nationalism, the rise of decay which you have in many places. You have it in Hungary, you have it in so we are really in a situation very similar to in the Jackson period, before just 30 years before the civil war in the United States. This we have to take extremely seriously. We have to focus on the main thing. We have to try to work together and always keep the human, the man, in the center, not the machine. Code is not law. We should never forget the humans, and we should try to not make a compromise and not think about profit, not think about financial gain, because we live through a unique time with unique opportunities to make this world better, to protect the environment, to get people out of poverty. We, because we work in this field, have an ethical imperative to do our profession according to the merits of what we see, according to the merit of what is real, according to the merit what is there. And that, I think, is what we have to do.
Alex?
Yeah, I think in the coming 10, 20 years, if Europe uses its cards intelligently, we have an opportunity to overcome some of the growth challenges we have, and I think that blockchain technology will be one of those, and I think it's here to stay, and if we play our cards right, Europe will be part of that future.
Right, quick vote. Which vision do you buy into? Who convinced you?
No conviction.
All right, okay, we're coming. Equal pace, a bit of a race. Mark, Simon, Alex, okay, equal again. All right, we have more people in the room.
Is there a prize?
I was thinking about it, but Simon's a little bit ahead. Give it a few more votes. Let's try to get to maybe 20, 25. It's fairly balanced, I have to say. So I think it's a good signal for the panelists to say that all of these comments were relevant and were found interesting. With that, I would like to thank very much our panelists, Alex Proikshut, Simon Olsen, Mark Sell. Thank you very much. And the next panel is led by Javier, and he has great speakers joining us. Javier, the floor is yours.
Nice to meet you.
Alex, nice to meet you.
Un momentito, lo prendiamo. Sì, io trabajando per un'officina in Zug. Mira, yo voglio crear una empresa, una oficina aquí. Sí, para, no ha grandido mucho, yo voy a crear un pequeño. Pero muy interesante I would like to meet more. Maybe you can speak.
Yeah, sure. Hey, Javier, ¿qué tal?
You see, I'm very much on the legal side, actually. I'm very much on the legal and regulatory side. I'm happy to share. I have a very good essay by Martin Hess. I would like to introduce Martin Hess. He wrote a very good article. He's a very good lawyer. I would like to. He's a key lawyer. Very good German architecture from a legal perspective. Martin Hess. Martin Hess, he's the best one. In Switzerland, he's the best. He's phenomenal. Very good. I would love to introduce him. I send you the papers. Thank you. Yes, absolutely. People will kill us for lunch. Yes. For sure.
I prefer to speak directly, okay? I made my presentation for my workshop. I've forgotten to do this, okay?
Good morning to you all. I'm going to start the presentation of data sphere aspects of financial data standardization and well, not to lose too much time, I prefer that Mirek, Dirk, Aitor, and Javier, anytime they would like to speak, would make their self-presentation. So I'm just going to give my vision as a private law expert, but I suspect that there is not much to speak about data sphere, except some aspect that I'm going to point out immediately. Would you please, Javier, help me to... In the past days, we have been working about data standardization and data modeling in terms of definition of regulatory environment to communicate. XBLR working, United expert working in the EU community is a good sample of that. But there are many institutions working in parallel all over the world to make this thing. These two definitions may synthesize very well what data sphere means to us within this context. Notional environment in which digital data are stored, or RegTech service provision, and I give you there some samples: connection, hosting, applications, and so on. And within the context of blockchain, distributed ledger technology services also. Well, in the parallel sessions of yesterday, we were working about the semantics and ontologies behind this, and Mirek is going to speak to us something about that, some developments on the concept of ontologies and semantics. But first thing I would like to pose to the debaters is, what is the meta language behind? Because Ignacio Boixo yesterday told us who is the beneficial owner of data standardizations, because the European community are working all together to satisfy someone's interests. Otherwise, it makes no sense. No, there was here 5 minutes ago, I don't see him now, an IOSCO representative, and it seems that they were not working together because they were utilizing a language for derivatives, for derivative products, or for other financial products, and that was a particular language, and there were probably no connection with other markets' languages, and that's a big problem. And to me, or to my view, we need the previous construction of the meta languages, and in that field, we should take epistemology as a reference, both in the philosophical contents of that term and in its practical applications too. The episteme is the Greek word that represents the theory of knowledge behind the RegTech and the RegTackling aspects concerning the uniformation and standardization of languages. There is a technological language. There are several types of taxonomization and categorization of languages in several regulatory fields. And is there a dilemma in the choice? That's a question I would send to my speaking accompanies, and maybe that's a pseudo dilemma. No? Please, Javier. Or this is not working. I don't know if this is working. Okay. I give you some well-determined fields where or by which or through which currently different working groups in the European community are working about this. We should practice an legal economic analysis or economic analysis of law, or as they prefer to say in the United States, law and economic analysis. I think, to my view, we should balance the three alternatives for ruling in very general terms. There is a ruling coming from self-regulatory organizations, the SROs. There is a focus, there is a very different approach made focusing on self-regulations from firms, from big firms mainly, but lately also from fintech startups. And there's a third approach made by states or by public administrations, and that's what I call the deontic ruling approach. How we should balance these three alternative approaches to improve the efficiency of ruling. That is, I think, to me, that is the biggest challenge for the European regulators, for all, not in particular for European Central Bank or for the IOSCO, I mean from the ESMA or for others, no? Secondly, what is the ethical charter? I give two samples: best practices, best practice codes, best practice codes on operational infrastructures, and then controls over licensees. But who are the licensees in trusted open data ecosystems? Who are? I don't know who are the licensees. We are working in a semi-public blockchain now. We're trying to build on a new blockchain in Spain, a semi-public, probably deregulated blockchain, and it's a permissioned blockchain, and the participants in that blockchain are democratically trying to establish consensus protocols, particular consensus protocols. And how do they do this? On an open software licensing basis. Stakeholder federation. I saw before that little participants were in favor of voting for the competitional or democratic consensus as the main difficulties for the blockchain developments. But I think that's a fundamental aspect. Standard publication and competition commitments are essential for the development of a data sphere community that is really operative and working on. Mirek is going to talk something to us about semantics, but when we build a thesaurus, including metadata organization, those metadata included on the provisions of theoretical data organizational provisions are universal or not? Are thesauri omnium rerum for everything? I don't think so. Not because of different languages used in different legal communities, like civil law or continental law or Roman law, and within them German law, for instance, is quite different from French law. But even in different parts of the existing private law systems, we find contradictory meta-languages. For instance, in Spain, we have two private law coexisting systems, which are civil law provisions and mercantile or commercial law provisions. There are countries where this does not happen, like Italian ruling or Switzerland ruling, Swiss ruling. It's not a problem in those countries, but in Spain, Portugal, and France is. And even we had third contradictory and even eventually opposite ruling, which is public law, for instance, taxation languages. How are they all combined? This is a huge task for aggregating data or big data that makes sense. Even though the efforts made by UN's UNCITRAL or United Nations Commission for International Trading Law, and so on, and similar organisms is huge. The task is huge still. This is still going on. It takes many, many years. And third, public law enforcement mechanisms. I give you there two samples: auditing of big data processing algorithms and privacy protection. What about Latin notarial professions? For instance, it's a Spanish system and full third-party protection registries. Yesterday, there was a lady speaking here, Ana del Valle. She was a representative of the property registries, Spanish property registries, and I think that not many registrars, which are high quality or first quality public servants public law servants in Spain, seem to have understood what a permissioned blockchain is. They just had read something about public blockchains based upon currency, on cryptocurrencies, but not other kinds of blockchains. And they felt invaded and substituted by blockchain technology. They felt it as a big threat. No. But they didn't seem to have understood the possibilities to develop side chains or a combination of different chains working together to provide a combination of security, privacy, and contribute to the ends of such public institutions. We could give some samples of application of those rulings in that European Community compulsory ruling of 2016 in terms of contractual liability of the party responsible for data processing and protection, controllers of personal data transfer, and those relativity and proportionality principles in personal data protection. For instance, according to our currently going on semantics, or the semantics we're trying to build, and its correlated ontologies, is there an established principle of technological neutrality in data protection as concerning blockchain devices, for instance? Is Section 15 of that ruling applicable to blockchain current developments? I don't know. And as I have noticed too, these are the years in which those debates outlined there have started to move in the legal private law and public law communities. No? But I would like to distribute my word and speak something about the 10 or more year horizon. Many of those issues have been outlined already by Beju, mainly by Beju this morning, and I wouldn't like to duplicate my speech. I just want to pause them and set them for further debate. So I'm going to give the word to Mirik.
Thank you.
Otherwise, we will never go to have lunch and so on.
Okay. I will try to keep short. Okay. So my name is Mirek Sopek. I'm founder and CTO of Macolab, company incorporated in Poland, with offices in France, UK, United States, and we are digital solutions agency. I would like to start the context, in the context of what you're saying, by some unusual statement or unusual recollection. We are in Jesuit-founded university, right? Who knows in the auditory another famous Jesuit, Teilhard de Chardin? How many people know Teilhard de Chardin? Just two? Amazing. Why I mentioned the name of Teilhard de Chardin? Because Teilhard de Chardin, French Jesuit, was the one who put the concept that is absolutely important to the deeper understanding of data sphere, of everything that goes on today with the move of law, ethics, money, value into the data sphere, whatever kind it is. And this concept is called noosphere or noosphere. That comes from the concept of noesis, okay? And it's absolutely amazing. And I think that everybody in the digital world should read Teilhard de Chardin, despite differences in religion, philosophy, whatever. This is such amazing and visionary approach to what is the evolution post or after biological evolution that may happen. And this explains a lot of also controversies and dilemmas that we have today. Because it's very hard to really grasp the essence if you don't go into fundamentals of philosophy. In this case, amazingly, something grounded in Jesuits' philosophy, okay? If you can name something like that. So that's amazing reference to the place we are and the bigger context. However, now when we ask about ontology, I would start from not telling anything particular, but from trying to answer your question, how we should start. Where is this metadata level on which we should find ground or foundation for development in these different areas that we have discussed here, that you mentioned and introduced us? I think about two approaches. And frankly speaking, I have no answer which one is better. One is the top-down approach, and another is bottom-up approach. When we speak about top-down approach, to my dismay, I see almost complete ignorance about fundamental development in something which is called the upper ontologies movement, okay? And here in Europe, we have one of the best people ever existing, still alive and still active, Professor Nicola Guarino from Italy, yep, who created DOLCE, the upper ontology. In the United States, we have Barry Smith, who also has strong links to Europe. He worked in Leipzig in Germany with his BFO, Basic Foundational Ontology. And these upper ontologies really form this layer of metadata where we first define fundamental concepts, like what it means to exist in time, what it means to exist as the object that doesn't change, what is the manifestation, what is change, and so on and so forth, what is the object itself, what is relation, and so on and so forth, right? What is the basis for taxonomy? So this is exactly the ground in which I think we should ground our research when we go top down. However, we need to be careful because in many attempts to go that path, top down, we sometimes forgot the realities. Reality of people, reality of the dialogue, of the exchange going on social media and everywhere, and also the practice in economy, blockchains, and all these things. So there is an alternative approach, which I call bottom-up. And this approach we presented yesterday in our workshop is represented paradoxically by big guys today, okay? So the most important player is Google, of course, right? However, I must say that Google is doing that part in a really neutral way. So they invited Bing, their competitors, certainly, Yahoo, when still was powerful, in Europe, or bigger Europe, if you like, they invited Yandex from Russia, and now they start to extend this concept to China, and this concept is called schema.org. What it is, it's absolutely simplistic model of ontology that was built from bottom-up perspective. So they looked into what is the most important object, or what are the most important objects on the web, because that was related to the web, of course. And if you look there, you see that this web actually covers cars, people, organizations, so objects of the real world. And the whole schema.org is like the movement to create the ontology, really, ontology, but with totally different approach, where you don't go through very deep philosophical concept, but you actually look into the fundamental entities that are important for selling, for exchanging money, and many, many things like that. And you build this structure, which is based on a quite simple formalization scheme. So for those who know a little bit semantics, let me tell you that schema.org is built on RDFS model with some modifications. And of course, in this panel, I can't go deeper into this. We had this presentation yesterday, and slides are available. I sent them to organizers. So this bottom-up approach is something that I also believe strongly. So I think that when we look into the bigger, somehow like a context, I would advise to use upper ontologies for some projects, particularly when we hear in the RegTech sphere, this define once concept that we heard yesterday very strongly. This should put into the picture constructs and methods of these upper ontologies. However, when we go for situations where we don't aim to that big scene, we should really go for simpler things, bottom up, okay? And in our presentation, we showed how we potentially could use this schema.org approach to literally make XBRL more popular. That's what was the essence of our presentation yesterday on our workshop. And I think that just to add the final thought from myself, there is extremely interesting development going between this world of ontologies and definition of knowledge I just described, whatever bottom-up or top-down, and blockchain. So even in our lab, we work on the data representation that are common for ontologies and how to put them on blockchain in a proper way. And there is a lot of interesting development around there. One of them is Boscoin that incorporates our ontologies on the blockchain already. So this space of the blockchain, which in my opinion is mostly important for trust, as we had before, right? Trust or trustworthiness, rather, maybe in this, parlance of Mark. And that is the model where you can literally build the meta-language also with this trust that we hope to get from blockchain. And these two directions are not completely going into different directions, so there is a nice convergence.
Okay, that's right. If you don't want to say something else, for the moment, I give you...
Okay,
I believe...
I think my sentence is finished right now, okay?
I strongly believe that they are both compatible too.
Yeah, okay.
I give the word first to Aitor, because that's the... Not for a different reason, but that's your pre-established order, okay, which I didn't make it, but it was so. Aitor comes from EIOPA. It's another supervisory authority, and he's going to explain it.
Correct. It's working? Hello? I'm coming from EIOPA. EIOPA is the insurance regulator in Europe. It's the one that is on charge of the insurance sector. Just to introduce myself, I am the project manager of the XViral project, let's say, for data collection for the insurance, for the Solvency II call regulation. That is the one that is, has harmonized the data collection in Europe for the insurance sector. Just by chance, I studied here. 20 years ago, I was one of the chairs, but much younger. I'm engineer of ICAI, and I have seen, and I recall that I can, for me, was today, let's say, a special day, because I can see how much the world has changed in 20 years. When I joined here, there was not internet, there were not mobile phones. I was studying, and at the end of this was my first degree. At the end of my second degree, I did the project, the final the final dissertation about the peer-to-peer. This is when I started. There were no mobile phones. At the end, there were peer-to-peer. And when I'm seeing how the data itself and how the technology is changing the world, I think that there will be, in the next 20 years, a huge revolution. Today we are speaking, or I have heard a lot about blockchains. There was also a little bit about quantum computing that could, I think, change the world. Quantum computing only have few use cases, but within these use cases can have a huge difference on performance. We are speaking about millions and millions and millions of times of faster computing, and this means that all the things that we have today encrypted will be plain text. You need to take care of it. Whatever you have today encrypt, and if it's public, will be plain text. There is one more thing that I would like to mention that for me is interesting, and we were speaking today about trends, and is the homomorphic databases, and this is related with, let's say, one of the use cases could be the public disclosure of data. Homomorphic databases are databases that you can share, and are having two main benefits, and is that they are never unencrypted. Let's say that you can ensure that the data itself that you are querying, this is in very early stages, but the data that you are querying is never encrypted on the chain. I mean, at CPU level, when you are, let's say, aggregating or computing data within the database, there is not plain text in any of the levels till the end, really big end of the user. And this will permit, for example, that you put in a company, put all the assets of the company in a database, ensuring that no one can check or never see the assets. However, for example, can work with aggregate and can say, okay, I want to check to sum up all the assets, and then can see the plain text, but never can access to the granular data. This is something that probably will come much later, but it's something that is moving up and may change the world as could be Bitcoin and so on and so forth. I think it's very difficult to say on the terms of the data sphere where we will be, but it's clear already nowadays that the data is moving the world. It's the access to data and how the data is processed is giving the big benefits on the market. I have to say that in financial reporting, and is the narrow space where I'm working just now, we are still working in let's say in a silo. We're still working in something that when you look with this kind of eye, you say, okay, what we are doing is something like, I would say, early 2000 technology. However, I think that will be a big change also on the financial regulations on the next 10, 15 years. We saw change that I agree with you, for example, on the slot. If we are not in this stream, we will lose the opportunity, because it will not wait for us. We cannot resist, and this I think that was more or less my brief overview that I want to say today.
Okay, I agree that we will not be able to resist. That's for sure. Now I give the word to Dirk. Dirk, I think Dirk is a genius, really.
Well, thank you very much for the compliment. I can confirm that this is not the case at all.
Yes, it's the case, but intellect, he's going to speak to us about intellect for many reasons and so on.
Well, I had the opportunity yesterday to run a workshop on blockchain, and you may have understood that we are very much into the private permission blockchain space, which is a space which is differently developing from the traditional open permission blockchain, with the notion that there is no cryptocurrency usage in the processing of data and transactions in the private permissioned, although you can also implement that there as well. To say a few words about myself as an introduction, so I have a former background in IBM and then in Belgacom, which is a telecom operator, and later on I founded Intellect companies, with several companies in the meantime. And the reason why I'm sitting here is mainly because over the last 10 years we have been very practically developing and using and making and implementing software that does all what was discussed so far here. So we take standards, we map them to other standards, we do mappings, transformations, transliterations, trans whatever. We have developed our own pieces of software for that to make it easier for any organization, whether it's in RegTech, InsurTech, FinTech, whatever tech, financial tech, to do these mappings and transformations. So that's one part of it. We have integrated and we've worked a lot with ISO 20022 over the past years, in the sense that we just take it as a given and then we process whatever information is contained within the ISO 20022 messages. And recently we are trying to see and to bridge between ISO 20022 and whatever comes as new technology in blockchain. So we use these messages or these transactions or these pieces of information, whatever it is. It should not necessarily be ISO 20022, it can be any other standards. And we use this as triggers to execute smart contracts on blockchains. So we're doing the marriage between old world and new world. And again, we are very practical, feet on the ground people. We're engineers, we're not lawyers. Very often we don't really understand what the lawyers come up with, but whatever lawyers or regulators come up with, we try just to implement with technology. That's our positioning. Very basic, feet on the ground, doing coding, testing it and making it work. That's our positioning. So in the meantime, we have grown as an organization, which we founded a few years ago in different regions. So we have positions in Mexico, New York, in Eastern Europe, Ukraine, and in Lisbon, where the people are actively working on everything that we have been discussing so far. This geographical spread gives us the opportunity to take the latest news and information and technological developments from the United States, which is on the one hand San Francisco, on the other hand New York. So we learn a lot there, and then we take the plane, literally. It's an 8-hour flight. We land in Europe, and we can use that knowledge over here in the different projects. Now to the topic of today. I was 100% in line with Mirek in terms of his vision on the bottom-up approach, on initiatives like schema.org that really have the capability to structure this whole field of which is the topic of these 2 days conferences. Not so much a believer in this top-down approach, because in the past we've been working a lot on theoretical exercises that we hoped would come to the field. It never happened. And then you need the self-structuring and the self-regulation discipline of a number of big actors to bring together the people that are active in this space to come up with a bottom-up approach. So if you ask my opinion about it, it's just my opinion, the bottom-up approach leads to really practical results. Then again, referring to the things that we are doing, these practical results, we can actually use them very practically in real code, real projects, and real implementations, which is what I want to stress. Not to make too much theoretical approaches, but be very practical with the big players on the globe and implement these solutions in the newest technology. You were working with year 2000 technology. Well, we're working with 2017 technology and potentially We try to co-develop the 2020 technology at this moment. What it exactly will be, we don't know, but it's a passion to be in this space and to help to work on that. So I think given the fact that this is very much in line, we can help you too, by the way, with technology. This is the space where this cooperation and this forum may be useful to bring those parties together to get it really concretely going in real code, real cases, real projects, and real implementations. And as far as we are concerned, again, we're engineers, it has to go fast, so we're not very happy with things that will happen in 2025. Let's look at what is there today and how can we make it work today.
Okay, thank you, Dirk. I would like now to initiate the debate. But firstly, I would like to ask Mirek if he feels that the bottom-up approach, which seems preferable to Dirk, may fail in the sense of utilitarianism and in the sense of relativist risks. You know.
Good question, actually.
because to gain consensus on permission blockchains, for instance, we need to put some order. No? I don't know if theoretical or make taxonomical upper approach up on top.
Well, I used to believe.
But I mean, with feet on the ground, as you said too. I think maybe to put some. Personal or no spherical order in all of these things?
Well, it's very hard, first and foremost, to use this no spherical order because we still don't know really what it is, okay? We live in that and we perceive that very much, but it's very hard to conceptualize, okay? So coming back to the reality more of the bottom-up and top-down, what I actually believe strongly, and that's what I'm very thankful that you mentioned it there, is that bottom-up approach is applicable to multiple scenarios, and I don't believe that there is this danger because as long we go with people who are trustworthy in this community, and if you look how schema is organized, I mean, I have no time to explain that, how it works, this communal process of building it, there is a lot of trust indeed in that, so I don't believe on any kind of, utilitarian approaches. There were some attempts, and I touched even slightly some people who wanted to promote something that was very much theirs, okay? But there are some other counter movements that blocked that or neutralized and so on and so forth. So I am not very much concerned about that, and I strongly feel that this is the best approach in the current world. However, when I said about this top-down, I said specifically on specific applications. And in this,
like XBRL?
not very much, because when we speak about XBRL, XBRL is used in a different way. I mean, so there is a different approach to XBRL when you are somebody who defines SBR in a given country, like in Australia right now, right, or in New Zealand and Netherlands. And there is a different approach to XBRL when you are accompanied to file some report. Okay, so there is two different approaches. And I think that in this space, I feel that more or less we need more of the bottom-up approach rather than top-down, also because of failures of the past of these big taxonomies. However, in this presentation of, I guess, Peter yesterday, right, who was on Skype, we clearly heard that there is a process of trying to make regulation less costly for participants by define one's approach, right, and report one's approach. At that moment, you need to be very precise, and you need to be very concerned about the fundamental structure of concepts and taxonomy that you use to build that kind of the approach. And this approach will never go to the very wide adoption because it will be between regulators and basically companies that can afford for a little bit more advanced knowledge engineering. So I have faith in both approaches. However, in my opinion, they must be applied to proper fields. So for example, if you try to build the language for fundamental financial institutions over the world to describe their products. Bottom up is the way to go, and you can go to schema.org, to documentation, go to bank and financial institutions. You can see what we delivered under the name of financeschema.org and this finance extension. Okay, this was totally bottom-up approach, where we defined the literally part of the language, how to describe financial products, how to identify bank using LEI, and all these things. So this is this place. However, when you do that in a different way, when you define the taxonomy, I think that the knowledge engineering of a higher quality that is today represented mostly by those who create upper ontologies is still of value. And I didn't lost my trust in that approaches. However, we need to look where to apply that. What is the scope? If we try to go everywhere, we will fail. But if we go to that part of the development, like a building taxonomy, good taxonomy that has a clear structure for regulators, I would really advise to knock the door of some of these people I mentioned, Nicola Guarino, Barry Smith, maybe people from Leipzig who built the GFO before, General Formal Ontology, and other attempts like this, because that represents the logical structure of knowledge in such zones that may still apply.
I absolutely agree with you, and I think that explains at least partly the success of the sandboxes regulatory, because they ask people what their essays and errors have produced to better improvements of regulation. I would like now to ask Aitor, what does he think about InsurTech consolidation? If you look at the slide in the fourth point in InsurTech advances, I don't mean, when I have written virtual policies, I didn't mean policies in terms of directions sued by public administrations. I just meant the document, the policy, the insurance policy, a virtual policy as a tokenized or tokenizable asset. No? Do you agree that this is possible in practice, to virtualize all those assets and with the possible help of IoT devices in a medium-term?
Difficult to say for me. I'm not.
What are your expectations from?
Yeah, I mean, difficult to say how it will evolve. I fully agree, for example, on one of the that there was this morning, that the financial sector itself will change. Whatever we know now on how the policies are working in the future, doesn't need to be like that. I mean, we are speaking about probably a short future. And this, let's say, is my answer, because I'm not fully sure there. I'm not a visionary. But touching up on your point, because it was very interesting for me, and also on the Peter that mentioned yesterday about the fines ones. On that, yeah, I have more strong opinion, let's say, to share, and I'm not fully sure that that for me is let's say, the main challenge or the main goal to achieve to define ones, but to have a common dictionary where you have different acceptions. I think it's not so important that, and I will put an example. In EIOPA, we are now doing the regulation not only for the EIOPA itself, but also for the ECB on the pension funds. And it's the second phase. We first harmonize the insurance. We have also a model for ECB, and now we are doing the pension funds. The pension funds in ECB, the definition of bond is slightly different than the insurance, and need to be different. That's not a big problem. The problem from the user and the reporting perspective is to be able to realize that this difference exists, and that is clear for him that the difference exists. Because the other, in my point of view, when you speak about define one, you are going almost to the natural language. In the natural language, there is not only one definition. And then, for me, it's more the point to...
It's polymorphic.
It's polymorphic. Then for me, it's more, maybe on the schema.org that you are saying, it's more to stabilize the mechanisms, to have a common dictionary way to identify the difference.
Yes, exactly. And the schema is polymorphic because of that situation.
And I think when Peter is trying to, let's say, consolidate, is more thinking that we are going to have in all the financial sector the same words for the same concepts, and this is a little bit, let's say, over technology at this point, I think. not only in the technology scope. Catching up on the.
Would you like to say something?
Yes. So you had difficulties in replying to the virtual policies, as it's called here. I suppose you mean the contracts, right? Insurance contracts. So in this, again, permission blockchain space, there's a lot of initiatives going on to see how you can translate a real insurance contract, I would not call it policy, but contract, into smart contracts. And then it's more like, what do you define like a smart contract, and so on and so forth. To make it simple, there is, within insurance organizations, thousands and millions of paper-based insurance agreements that are potentially being translated into code, which you can call smart contracts in whatever form that you can come up with, which then become more easy to manage, to control, to supervise, to make inventory, and so on. And the difficulty now is, how do you bring written real language contracts, how do you translate them into code-based contracts? And this is a whole field of research, I think, that's going on to make what is now written in a contract in a specific language, Spanish, German, English, how to put it into the enforceable on the blockchain, as we discussed yesterday with all the features of blockchain, enforceable contracts on a code, which is smart contract code. You can never say that a smart contract is a smart version of a traditional contract because it's different concepts, but you see where the link could be placed, that you make something enforceable on a private permission blockchain that today is just at the will of people acting in this space. It becomes like a transaction on the blockchain. So virtual policies with online supervision. The aspect of online supervision, I have no clue about that. That's the regulator who will have to enforce it. But from technology standpoint, again, this is very interesting field of research to bring all these legacy old contracts onto the blockchain. And the other thing was, when you go to connect this with IoT, of course, as technologists, it's fantastic what's happening today. If a car crashes before you even know it yourself, because you're lying like a dead body there, your insurance company is already informed about it, and the contracts on the blockchain start to get executed. And that contract could be like inform the hospital, inform insurance company, inform the police, take action for potential claims that will come, and so on and so forth. And this is the passion of the technological possibilities that are there, and what is written here in point 4, insert tech consolidation, there's going to be a big thing happening in that space.
Yeah, of course, there can even more. Imagine that you are still in hospital and your money for the hospital expenses already back in your reimbursed in your current account, even when you are still blind or with a broken leg. That may be
this is a bit dreaming, of course, but potentially this is what it is about.
But I would like to make a precision, but it's professional deformation, of course. When I write policy, I mean not the document, the contract, as you said before, because the policy is the contract, but it's a double-faced concept, because on one side it's a contract, but on the agreement of wills or accordance of wills, but on the other hand, it's document that contains credit rights, and that's a much different thing, because it's like a sharing in a quoted company. There is the document which is itself negotiable, like today an electronic balance sheet or anything, and you can translate it into tokens. So the token will be the future concept containing what we traditionally called credit rights. But it has also proof and judicial and probatory function to be developed, but it's in parallel. So you can negotiate it because it incorporates credit rights, and at the same time it may serve you to to go on ahead with legal proceedings. But the policy has both functions, because the policy itself, at least in continental Latin systems, is a document which is negotiable itself, like a bill of exchange, for instance, or a bond. But so we have. It's true that we have to produce the documentation, and we have to create the correspondence between the traditional document and the smart contract. But also we have to permit, and that's a big task of regulators, to permit the incorporation of rights to the token, and we are working on it by this time. There are few people in the MIT working on that too. And now I would like to give the word to other speakers in the audience. Would anyone want to direct something to any one of them in particular? Or? I cannot believe there are no questions. Maybe it's a bit late.
Too late.
It's too late.
It's just
it's half of an hour
skip
gap.
the coffee time. We are now to go to skip the lunch time, so that's probably a reason.
Maybe this ontological and approaches are too
heavy.
Too heavy for
with empty stomachs.
Yes.
Okay.
Does anyone say something? Otherwise, I declare my panel closed, and I want to thank you all, your collaboration. See you later after lunch.